Hey everybody, good morning from Rye, New York, and here we are today at the second part of our blockchain and cryptocurrencies and DeFi and everything conference. We are very proud of our conference today for two reasons. One, because it's ours, and B, because we haven't really built it. I would like to really thank Donna Rattle for doing an amazing job and helping us building basically the panels today. NFTs, as you know, is one of them, and regulation. So this time, these are the topics we would be talking about. In general, we're very happy. I mean, to talk about what's going on in a world that people, you on one hand you hear some very famous analysts saying, at least in cryptocurrency side, it's not worth anything, and on the same week you would hear I don't know, Citibank or whomever it was giving Bitcoin 150K valuation and everything that goes on. So we will try to figure out what's going on there, of course, as well as the NFTs that are becoming very serious. If you'd hear how much money was put into that and what kind of deals we saw. My good friend from Bloomberg will be giving us at what time that is happening. Mike will be speaking at 12, giving us an overview of the markets. It will be interesting to see what he has to say about what Taleb and others are saying about the market that they think is worthless. Regulation obviously is very important to see the developments in this space. And now you see, when we did our family office blockchain conferences in 2018, basically in one day, basically in 2 days from morning to evening, we covered every aspect that we think families care about: how families invest in this space, regulation, what the corporates are doing, what are different subsectors in this world. What we've decided to do here online is just basically do 3-hour sessions, because I think anybody that tells you that people would stay longer online, it's not serious. So every time we pick 2 different topics. I believe the next blockchain crypto DeFi event we're doing is late April. I'm not sure exactly when. I should know that. It's kind of basic for us to know that, but it's in April. Ask us and we'll tell you. I believe then we're talking about perhaps something about the environment with KPMG. That's one of the topics. And the other one would be a session we're building with one of the senior people at PayPal. So it's going to be very, very interesting. And that's going to happen, as I said, next month. For those of you who don't know us, hi, Peter. How are you doing? We'll start a session in 5 minutes, but stay there. We are one of the most prominent family office groups, and I always like to say when we look at blockchain, it's nothing like what you see at blockchain conferences. First of all, when in 2018 I was really pushed into this space by one of the families, several families that told us, look at blockchain. We went to blockchain conferences and we said, gee, we don't want to see half of the people here. We saw ICOs that are ridiculous. We saw advisors that were more ridiculous. And we saw people that, were basically running a cult. That's all there was to it. And there were some good guys. So we wanted the good guys. And I think that's what we managed to build at our events, because I think family offices are more sophisticated. They wouldn't be a part of the messes that went after all those stupid ICOs in 2018 and 17. They just wouldn't do that. They would never qualify when they check them thoroughly. I believe some of them invested in cryptocurrency because it's fun, because it's for them, for some. I think we see, by the way, 2 kinds of families: those that would buy some and enjoy, like Las Vegas and see what's happening, and others that would actually take it very seriously and understand the space very seriously. So that's really what's going on. So for those of you who don't know us, we are one of the most prominent groups in the family office space. Our tech orientation, I think we're probably the most tech-oriented group out there, is basically because we came out of Israel, the tech world, the startup nation, so to speak. And so every conference we do, and our conferences today are in New York, Miami, Houston, Dallas, Chicago, Vancouver, Montreal, Toronto, London, Tel Aviv, and the UAE, all open with a tech session and innovation. And we also have a sub-conference dedicated just for innovation and technology for families, which is basically this event that we do now online, that we hold with and at the premises of the world's leading legal firms, Baker McKenzie in London, Sherman & Sterling, Herrick Feinstein, Reed Smith, Clifford Chance, many others, Pepper Hamilton in New York, Osler Steichman, many others in Canada. So that's our story. For those of you who don't know what we do, this year obviously is a tough year, but we did do sessions online where I interview some of the world's most famous families on one hand and some very interesting investment opportunities on the other. We've been doing it since March and actually getting more families on board that couldn't attend our events because they're in Asia or they're on the West Coast or places where we're not. So that's been great. So what we have going, just so you know, is twice a week we do our sessions online. And on April 22nd, we will have an in-person conference at the rooftop of the World Trade Center in New York City with the great one and only Larry Silverstein as the keynote speaker. And in June, mid-June, again, all given COVID is under some control, we'll be doing a UAE conference in Dubai and Abu Dhabi. At this point, I would like to start our second part of the conference today and get ready for the third one next month. And Peter, I had an entire hour with him doing one of our sessions. It was very exciting to talk to you from Aero Capital. He's going to look at the current opportunities in the blockchain crypto space and the strong advantage of diversified multi-manager strategy to capitalize on these opportunities. So Peter, thank you for joining us, I believe from London. I feel like you do a Eurovision Song Contest now. You're in London, right? By the way, I think you're on mute, Peter. Now we got you. You're in London.
Yeah, correct.
Great. So I'll let you take over for now, and thank you for being with us.
Yeah, thank you for having me. It's a pleasure to be here. So can you see my screen now?
Perfect.
Yep. Okay, so thank you, Danny, for introducing me. My name is Peter Habermacher, and I'm delighted to be the Chief Executive of Our Capital. Our Capital opens up the exciting and rapidly evolving DLT and crypto asset growth story for sophisticated investors via a fully regulated EU domiciled fund of funds. And we've put together what is, to our knowledge, one of the first genuinely institutional quality fund of funds offerings in this space. Our goal is to offer broad exposure to the long-term growth of both DLT and crypto assets whilst protecting against the market's short-term volatility. And this is achieved by investing across a range of funds with different investment strategies, an approach that provides a strong source of diversification in these fast-moving markets. We open up the sectors and the companies best placed to generate super profits as a result of DLT and crypto assets. For crypto assets, we also take advantage of the large market inefficiencies to enhance all the tremendous return potential of this rapidly growing asset class. Quickly, the disclaimer. So our capital team combines younger investors, including me and the Chief Investment Officer, Hinkis Shan, with our direct experience in crypto investments and traditional asset management. We also have senior practitioners from the hedge fund industry, such as Peter Rigg, the former CEO of HSBC Alternatives Investments, alongside other well-known names in the alternatives industry. So from our understanding of the breadth of the DLT and the crypto asset investment landscape, we have identified 5 key investment aims which we believe are key to exploiting this broad opportunity set. The overall investment objective is to achieve double-digit annualized returns in a risk-controlled and sustainable way. And this involves capturing the long-term as well as the immediate short-term opportunities. So on the short-term side of this is about exploiting the market inefficiencies in areas such as cryptocurrencies. The long-term part of this is about capturing the strategic value that arises as different industries develop and implement DLT applications. And finally, this can all be brought together in a professionally managed portfolio using established risk management frameworks to protect against the high volatility of this asset class. So why invest in DLT in crypto assets? First and foremost, from an economics perspective, DLT in crypto assets offers an attractive long-term growth opportunity. Second, this technology has the potential to disrupt virtually every industry and has applications throughout many different value chains. Third, this asset class has been the fastest growing, highest returning asset class, both on an absolute and risk-adjusted basis, and we believe that it still has a long way to go. Crypto assets offer superior risk-adjusted returns when compared to other asset classes. The Shutter ratio of crypto assets over the past 5 years has been far above those of other asset classes. Crypto assets are also uncorrelated with other asset classes, with correlations of close to zero across the board. This makes crypto investments a great portfolio diversifier. Well-known industry names are embracing this new technology. What makes the DLT story so powerful and the blockchain story is the clear economic value that can be generated through its adoption. For crypto assets, nearly 80% of institutional investors now find something appealing about them. Crypto assets are uncorrelated to other asset classes, are an innovative technology play, and have high potential upside. And many top-tier institutions have already entered the crypto asset markets. Finally, established investment and operational risk management practices can be applied successfully to this asset class. So, what is the impact of adding DLT and crypto assets to a portfolio? The first key observation in this analysis is the outperformance of crypto funds relative to the crypto market overall. Secondly, there is empirical analysis that suggests that to get the most out of an allocation in this space, one should allocate up to 5% of a portfolio to DLT and crypto assets. Active versus passive management in this space. The potential for outsized risk-adjusted returns from effective active management is an order of magnitude larger than in traditional asset classes. One can see this when comparing the performance of crypto funds relative to passive benchmarks. So the average monthly Bitcoin return over the past 5 years, for example, is 7% versus 7.5% for crypto funds, whilst their monthly volatility is 20% lower than that of Bitcoin. Best strategies based on diversified allocations have done even better. However, there is a large dispersion in crypto manager performance. At our capital, we believe that the best way to capture the alpha that these managers generate is through a well-diversified portfolio with exposure to a carefully selected range of risk-reward profiles. So how to gain exposure? There are many ways to access the DLT in the crypto asset growth story for professional investors, but the real challenge is being able to gain exposure in a properly risk managed and dependable way. We are arguably at the same stage of market development as hedge funds were in the 1990s. Rather like then, those who are less familiar with this space should consider a specialist fund of funds managed by specialists in this space. This can provide access to the full range of opportunities available without the pitfalls. So on the DLT side, it can be difficult to access the top VC deals and also the top VCs. And the blockchain ETF approach can provide impure and over-concentrated exposures. Equally on the crypto side, direct investments require a lot of time and expertise, and there are operational challenges, whilst pure Bitcoin funds and passive indexes can carry concentration risk with little downside protection. Actively managed crypto funds need thorough due diligence and have widely dispersed results. There are 3 key advantages to a fund of funds approach to the DLT and crypto asset growth story. First, provide access and broad exposure to the expertise of active managers that specialize in different areas of this diverse set of opportunities. Second, portfolio diversification across asset class, style, strategy, and fund structure can provide an effective balance between risk and reward. And the third key advantage is specialist expertise. This sector demands a high level of professional investment and operational due diligence to identify the best managers and identify the risks. There is a very broad and diverse set of opportunities in the deal team, the crypto asset growth story. We split the strategy landscape into 4 macro buckets: market neutral, long shorts, opportunistic, and long term. Individually, these strategies offer exposure to various subsets of the market, but together they form a more balanced approach to this growth story. And to give some idea of the complexity of all these moving parts, and this slide shows all the things that need to be considered and the breadth of the opportunity. This is the process which is required to arrive at the best managers, the ones most likely to identify the best future opportunities, and importantly, at the right time and in the right way. Finally, we believe that understanding the economics is important when approaching this space. We have spent a lot of time in building up our economic framework to ensure robust support for this growth story over the long term. Alongside our full economic white papers, we have published 50 articles on the economics of DLT and crypto assets as part of our thought leadership series on our website. So in summary, we believe that there are some really exciting opportunities to generate outsized and sustainable returns in this market, both over the long and short term, and the best way to approach things is through a professionally managed fund of funds. Thank you everyone for listening.
Thank you, Peter. I believe you have more, like 5 minutes more to talk about maybe what's going on in the markets. Where do you see the market going? So you can still talk a little bit more about what's headed. We just saw a crazy week, right? I mean, when Tesla pushed the prices higher, then pushed the prices lower, then all the what's going on. So we'd love to hear what you think about what's going on in the markets, what you're seeing. Yeah.
Sure. Yeah. I mean, short-term price movements in a market that is just so volatile and unpredictable. It is very hard to do in a systematic way. So our analysis does show that on a daily basis, crypto returns are actually extremely predictable as the market is just so inefficient. And as we covered in our previous discussion, we have out of this provided a number of, or created a number of proprietary market indicators that have been effective in measuring the health of the market overall, as well as predicting future direction of the market on a monthly basis, as well as on monthly tops. The current weakness, last week's weakness in the market was unsurprising given the kind of very brisk run up of Bitcoin to $58,000. And so it very much was a healthy pullback down to $43,000 over the weekend. But as said in the last webinar, kind of all our longer term indicators are extremely healthy, indicate strong market growth and strong market adoption as well. And so any kind of corrections that we see in this nature in the short term are likely to be short-lived. And in the months going forward, we do expect the market to carry on in its upward trajectory, just given the market is so inefficient and just so speculative. These ups and downs to provide a great opportunity for the types of managers that we seek to select and invest in to outperform the market both on a short and long term.
And we have a question, by the way, Peter, one of our attendees here is asking, what are your views on DeFi tokens? Are they just another incident of a market rush like there was with ICOs?
So as with every new technology, there is an incidence of bubble-up behavior, hype, and over kind of expectations in the short term. But we do think that DeFi, decentralized finance, is going to be a major application of this technology and this asset class going forwards. And so in this SOG, as ICOs defined in the previous 2017 bull cycle, crypto respects to be one of the leaders in this current bull cycle. And we expect there to be overheating and a bubble as there was with the ICOs, but it to be turning to morph into something more sustainable over the longer term.
Got it. Well, great. Thank you, Peter. And for those of you, why am I red? I'm red. I became red. Okay. So that's the beauty of Zoom. How do I unred me? I need the effects here. Anything else, Peter, you would like to add here?
That's everything.
Great. So thank you so much. And people can later on get in touch with you. We'll send the information on that. What you're noticing is that I'm trying to do two things at the same time, forgetting that I'm the worst example of the male species that cannot do two things at the same time, as simple as changing the filter while talking to you. So that's why I didn't really say anything in the last two sentences. Peter, thank you so much, and we'll be in touch with you, and we hope to see you soon in person.
Yeah, thank you, Danny, and look forward to attending one of your in-person events.
Absolutely. So thank you so much, and I did manage to fix my filter, so I'm proud of that. Hi, Jay. You're not now. I believe you're at. Are you now? I think you're coming at 11:40, right, Jay? Yeah. So thank you all. Now my next speaker is Sonny. Sonny, I'm always impressed when we actually manage to get things right, online, live. Where are you, Sonny?
Hi there, Danny. I'm Sonny, live in UK, Birmingham.
Hey, great. So our second oldest conference is in London. It's been, I believe, like 7 years already. We love going down there and hope to see you guys soon next year. So Sonny is the founder of myhemp.io and Hemp Health. And we're going, as you know, talk about how we use blockchain and get it this time, to different sectors. Obviously, this time we're going to talk about hemp and their decentralized digital ecosystem that provides blockchain solutions to the current global complex challenges faced by farmers, manufacturers, business services. I think it's fascinating. Take it from here. Sonny, thank you for joining us.
Thank you. Firstly, good morning, good afternoon, and good evening to all of the participants. Today, I would like to tell you a little bit about myself and also the two Titan businesses in its relative infancy, so the blockchain industry and also the hemp and cannabis industry, globally where it's going to. If I can share my screen quickly. So over the last 4 years, we have actively been involved within the hemp industry. And more recently, over the last 18 months, we have actively been utilising our intellectual property and in order the way we deliver blockchain verified supply chain solutions. So firstly, Hemp Health, My Hemp and Professor Hemp, the three key brands of mine. Prior to being involved within the blockchain space and the hemp industry, I also spent a 15-year career within global FMCG businesses, primarily the businesses listed on the left-hand side, So Mars Chocolate, General Mills, Keter, another famous Israeli business. And I've been managing the top UK retail businesses, so first-hand experience of some of the supply chain transparency difficulties that are also experienced. So first of all, the actual blockchain technology that we've altered for our space has been presented to the Association of the Cannabinoid Industry in the UK. And Mark Burbidge, their quality and development lead, classified it as a very powerful piece of kit. So briefly, the presentation today, I'm hoping to cover off the mission and vision, the market summary in terms of hemp and where it's going to, where we personally are as a business, and also where we will be in the future, and then a broad roundup of our global IP portfolio. So first of all, our mission, our focus is to grant every hemp consumer globally high quality trusted hemp products in an instant, whereby they can check verified agricultural origins, independent product testing, government approvals, country specific legal compliance, and any other industry associated bit of information that the finished product contains and entails. And the biggest advantage of this is from a buyer, supplier, and manufacturer perspective, all of our participant ecosystems, they benefit by having access to financial and business critical services that are currently limited within an industry in its relative infancy. And what we hope to achieve is by incorporating these businesses within our transparent platform, it also opens up the doors to them in a global scale. The biggest thing with medicinal cannabis and hemp, etc., there's the complications involved in the medicinal side and transparency, making a product a very fine line between being a legal product and an illegal product. So once our system is developed and up and running, we are also hoping to expand this out to medicinal operators around the world and governments to benefit from our system. Now, our approach will actually revolutionize and decentralize the global system of hemp and marijuana consumption by utilizing a transparent, credible supply chain that holds all stakeholders accountable at all times, from the seed propagation all the way through to the final product goods in the form of food, drinks, cosmetics, and construction are some of the key benefits. Now, the work that we've been doing over the last 18 months involves how we could take the current blockchain concepts out there and to expand it out. So something unique to us is that we allow flexibility for national regulators and governments to also control their tolerances and also the variation limits within their jurisdictions. Now, looking at the hemp and cannabis market globally, the next 5 to 7 year projections, when we look at cannabis and marijuana, it's projected to grow at 25% compounded annual growth rate. And currently from 2019, the market was at $14 billion US, and this is expected to reach $47 billion by 2025. When we then look at hemp, so the sister derivative of cannabis, and CBD in particular, this is expected to accelerate at 36.7% compounded annual growth rate, going from 1.4 billion in 2019 through to 8 billion in 2027. In terms of the industry at present, where it currently is, by understanding the cross-border complications in terms of different nations and where their stance is in regards to hemp, cannabis, there's a major lack of compliance cross-border. And with an industry in its relative infancy, there's a major lack of trust from a consumer perspective, whilst laws and regulators and governments tend to attend to that. There's a lack of quality control, and I think that actually direct relates to slow audit processes that are involved. And as a result of this, with the varied international regulations, there's a lack of business and financial services related to the industry itself. Now, where we are hoping to be, and in terms of our decentralized transactional ecosystem, this is a broad diagram. So all of the 6 key participants here is our most probable scenario within our ecosystem, going from the hemp farmer through to the raw hemp manufacturer and the ingredients that they're using with cannabis and hemp itself. It's about getting independent product testers involved at each of the key stages involved. And this also allows quality standards regulators, global government entities, and the final hemp product consumer to also have transaction at each time within this to understand who's actually doing what within the industry, within their jurisdictions, which is good. One of the key points about blockchain and the actual industry itself is it's about making it as a simplified solution to the end product consumer. So the hemp product consumer doesn't actively have to be involved in the whole supply chain process, but the idea is with a QR code, they can access the key financial verifications relating to the product that they actually hold in their hands, that they've picked up off a shelf within the store. Now, in terms of our correlations between the key participants and the ecosystem, this is actually run by a series of permission hierarchical proof of authority smart contracts. And this is where what actually makes our system unique that we've attempted for the patenting is global government entities and quality standard regulators do not have to be permissioned in a predefined blockchain sequence. That actually makes this technology beautiful. And one thing is with our token, so the actual hemp token you can see in the middle, this is what will also make it easier to audit for a industry so delicate from being a legal product to a illegal product with any inconsistencies. We can directly see the transactions between participants and separating it from general fiat currencies and also any other cryptocurrencies as well. When we look at our global intellectual property, so on the left, Hemp Health and Professor Hemp, our registered trademarks within the UK span across over 40 product categories. This is a brief overview of some of our key brands. So CBD oils in the forms of drops and sprays coming from organically grown hemp, teas, coffees, organic hemp protein powders, and then we've got cosmetics and scents and candles. Our current business, hemphealth.co.uk, and by utilising MyHemp and the blockchain platform, this is where we open up our industry and our products to our competitors globally to represent our brands with some of the high standards in the industry. And over the next year, this is where we're hoping to develop, build our prototypes and incorporate it within the MyHemp ecosystem. In terms of the blockchain platform within MyHemp, we've also filed many registered trademarks across the UK, US, Canada, and the 27 countries of Europe. And we've also got a provisional global priority patent for our unique 4-node tiering system. So the roadmap that we have currently completed, moving on from all of our intellectual property, our most valuable product is ready. Detailed white paper. So the last 16 months I've spent building up the finite details involved. The actual hemp token itself will be launching from the UK, being FCA approved. So the legal opinion is already ready. AML, CTF compliance documents, procedures and policies are in place. And the next 6 months, what that actually looks like is, first of all, the FCA UK approval is taking place this month, expanding our IP across Africa and Asia. 14th of April, we are presenting to major retailers within the UK. And by May, June time this year, we're hoping to list onto crypto exchanges, making it public. And then August onwards, we are hoping to float on the UK stock market. these are my contact details. Feel free to get in touch. Currently, over the last week, we have opened the doors to speak to family offices if you would like to get involved. And over the next 2 weeks, this is where we are hoping to finalise any family office integrations, conversations in relation to investments with industries in its up and coming proficiency. And DC Finance will also be on hand if you did want to speak to them to gain an introduction. Thank you. And I hope you enjoy the rest of the conference.
Thank you so much. It's been exciting to hear your story. And yeah, definitely we will send the information of all of our speakers to our attendees here. And yeah, we hope to see you in person soon, and perhaps at one of our weekly live sessions as well. So thank you so much for joining us, and we will definitely stay in touch.
Fabulous. Thank you.
Thank you, and stay safe, everybody. Moving to my next speaker, it's always fun to talk about the gaming industry. You know, Jay, one of our speakers, Brock Pierce, who's pretty known, right?
Yep.
He made his big break with a company that if you know better than me, trades at the end of the day prizes that you find at video games. Now, for me, looking from the outside, you know, I'm not a gamer because I get addicted, not because I don't like it, you know, because when they started the 3D, I bought I think it was Samsung, those glasses that you put on the camera, right, on your phone, and then you get to see all the 3D stuff. I was like all over the place, so I stopped with that. But I couldn't really understand why would anybody care to buy a skin that you get in a game if you reach it. And I read Brock's work. They had actually people just their work was just to play games and find those things and trade them. So it would be when I look at my kids that are totally lost their mind looking at it, buying skins and all, I understand why there's a market to it. But my question is, maybe if the market is only those youngsters that are going crazy, and for them to have whatever skin or power or whatever is the whole sense, and you have a strong enough market to support it, which is just young guys. I will let you talk about that in just a second. I will just say that Jay is one of the most senior people coming from the gaming industry. I shared with him, you know, we grew up on other stuff, right? I mean, Star Wars figures from Kenner and stuff like that. I will just say Jay is massively parallel entrepreneur, human connector, and industry insight merchant. He had 25 years where he worked in the video game industry. I mean, think about it. Some people are CPAs. There are some people that are CPAs. Really, that's the job. They go to the office and they look at numbers and they go back. No, I'm kidding. And there are people that have their career in the gaming industry, you know, video games. So, you know, just saying. Anyway, he's spoken internationally and he's a domain expert on community branding, startup ecosystems, and new ventures and strategic market planning. He's been 12 years doing new ventures and exits. Most known for being Garage Games marketing director and chief evangelist. He helped grow the community, and that will be interesting to understand as well, of 250,000 game developers. They licensed for the AAA game engine, which I have no idea what that means, for $100, and coined the term indie games, which I guess like in the, I know indie in the film industry, you know, it's usually those UK-based movies that, you know, you never get to the end of, but it's, no, I'm kidding. And sorry, I have a lot of UK listeners. No, it's not UK, it's those movies from Europe though. Anyway, no, kidding, and ignited the indie game movement. Jay, the stage is yours. Take it from here.
And, you know, last time we talked, you asked me, so what is the disruptor of gaming by blockchain? And I said, well, I don't see a big sea change yet. And in the last month and a few days since we talked, there's been a lot of activity that's proven that statement wrong. And so I'm here to kind of discuss what is an emerging trend that everybody's seeming to talk about, whether you're in lifestyle or over in blockchain or specifically in the gaming world, we're seeing this happen. So let me just kind of help people to understand what we're dealing with here and get this.
And if you can only address my question as an outsider, is that how it works? I mean, what Brock did and what the industry does?
Yeah.
The market is basically 10-year-old guys. That's our market of the people that trade those things.
So a month ago, I would have said that's exactly what we're talking about. But in terms of the core gamers really being involved with it, what Brock built and he sold to Goldman Sachs was a gold mining operation for World of Warcraft. And they were hundreds of thousands of people in China going out and playing in the game and getting these assets, and then they were being sold in open markets. That was kind of the, so yeah, his DNA goes all the way back in video games around this. Now we're seeing a moment where that's shifting from those, that next generation that's playing the games and wanting to participate in this, to how blockchain is able to create these assets that are very unique. And they're called non-fungible tokens that are addressing this. And I kind of want to walk through so that people understand what all this buzz is about. You know, just recently, Mark Cuban said, you know, this is like the early internet. It's going to happen all over again, and NFTs and blockchain tech are going to be huge. Of course, Mike gets excited about lots of things, but I think he's probably onto something here because we're seeing a sea change. And if you read about artists selling stuff at auction and being built on NFTs, you're going to get an entirely different perspective. There's just all sorts of brands involved. There's sneakers now being sold with NFTs. The Wax platform is all about those skins you were talking about. And specifically, there was only a bunch of geeks on there. Recently, there's been a mass consumer movement towards the games that are supporting NFTs. Top Shot trading cards from the NBA recently used NFTs. And we're just seeing this just explode in terms of the market. It went in the last, I think, 3 months from like being 18 to 20 million to being over 250 million in ongoing trades. And that's going up this week. We've seen some huge numbers even this week. So a guy named Logan Paul, he's kind of famous for his work as an influencer in boxing. He just did one on Monday. He did this NFT and Peter Jennings covered it. It sold out in moments. And these were some of the things that were sold. So it's not just in games. We're going to discover that this is impacting a whole breadth of assets out there. And that's why I'm saying that gaming is now disrupting blockchain, is that these NFTs are bringing in a whole different class of assets. And these are some of the moments from that. So first of all, what is a non-fungible token? And I think it's always good to know our vocabulary here. I may be talking to everybody who knows this already, but it's just good to have as a baseline. So a fungible asset is one that can be exchanged and replaced in equal part or quantity to pay a debt or settle an account. It could be completely interchangeable. And so that can be like wheat or oil or lumber, or all fungible commodities. There are fungible goods, which, you know, we just don't use this word all the time, but even George Will talked about the court can actually determine that males and female jurors are regarded as fungible, and not so much a good, but a human, completely interchangeable. So they're of equal value and interchangeable. So that's fungible. Non-fungible, as you would guess, are a special type of token which are not interchangeable with other tokens. And so the token itself doesn't have value, but it gains value from the goods and assets that are represented by it. So that's an important distinction. Now, if you go out and read Salon Magazine or Washington Post or any of the 1,000 articles that seem to be on NFTs right now, they're focusing on artwork a lot because there are artists that are completely blowing up in this space from the traditional artist space to the digital artist space. And it's an interesting moment in time where this was one of the definitions I came across for non-fungible token, was that it's specifically a digital token encrypted with the artist's signature, verifying ownership and authenticity, and permanently attached to the piece. Well, yes, that is a non-fungible token in its application to artwork. But digital tokens and non-fungible tokens can be applied to all sorts of different kinds of assets. So they can encompass a whole range of elements, from anything from, like we see, digital fashion and collectible sports cars, to virtual real estate, like would be sold in a video game, the characters that we just talked about, and even sneakers. Nike and Adidas both have products that are, and actually Nike has a patent on the blockchain application of its chips that they're putting into their tennis shoes now. So again, trying to make those collectibles even scarcer by having a non-fungible token recorded on the blockchain and now being a discrete, non-interchangeable, so it's one of a kind, and that's what's driving a lot of the scarcity and demand. So again, Mark, he thinks that the collectible side is going to be completely turned, and he's thinking for the music industry, for the movie industry, and obviously for games and art. You know, he's highly involved in a lot of these sales right now. So again, it's probably best described around that digital certificate of authenticity. That's the important part that makes it a desirable collectible. Just in the last month, we've had 10-year-old meme that was sold for $580,000 and LeBron James clip that went for $100,000. So the application of this is, you know, far beyond the video game space. Musician Grimes sold several pieces of her digital artwork at auction and raised a total of $6 million. Seems to be a trend. Logan Paul, anybody who comes out with their own NFTs seems to be making about 6 million at a whack. But again, it wasn't that they would own the artwork itself. It just would be that they have the token of that artwork that they can then be fractionalized or resold or in any way, but the artwork is still out there and able to be shared globally with the planet. And this was an example of one she tweeted about a few days before that sale. So you've got an interesting movement in the art space. There's, gosh, articles full of other examples of this. So I don't want to make it seem like she was the only one that was playing in that. Here's a countdown of some of the most expensive NFTs. And these were mostly digital assets from games that were being sold. I know some of the background on this. I think some of the companies that were buying them were trying to increase value in the company. So they were investing into the company by buying their digital assets, which, you know, that's another way to bring capital into a company. But even this number one that's on here, this list was only published a few days ago, is now been eclipsed by a asset that was just sold on Monday for $2 million. And it was also a cyberpunk, I believe, asset itself. So things just continue to go kind of a little bit crazy. Is it a trend? Is it a fad? You know what tulips means from the Netherlands back in the day. Is it something that's just a temporary store of value, or is this going to be something that goes on? And I think that obviously there's certainly going to be markets that bubble up and pop, and you're going to see lots of corrections. But in overall aspect, the art, gaming, collectibles, music albums, all of these things are going to potentially create strong return on investment for people that are purchasing in them over time. Will there be a lot of money lost? Absolutely. Will there be a lot of money made? Well, we're already seeing that happen. So that's a foregone conclusion. So video games have been at the center of this trend. I actually did a panel discussion back in 2018 at LA Games Conference, and I had Wax and I had Decentraland and a number of other people that are building these now, what are becoming very popular environments. And if you can have a game where you can purchase assets in the game that are represented by an NFT, making them fully exchangeable and potentially having more value, wouldn't you play that game versus a game that doesn't have NFT backed assets that you're buying. You're just consuming, and you have no chance of ever liquidating them or seeing an appreciation of value. That's the belief that these people have, that even the Activisions and EAs are going to have to look at NFTs, because if it's us versus them, you're going to go to the ones that have NFTs in them. And then obviously, as you're looking at gamifying digital assets with other types of entertainment, you're going to see the economics change. And I think there is a generational difference here. I agree that I'm a bit of one of the old guys, and it's hard for me, remember when I was growing up, just understanding that insurance, which was, non-tangible, had some level of value in my life. It's the same thing, I think, for kids now. They actually already look at digital assets. My family was in the business of selling postage stamps, which a recent appraisal of those assets, they're no longer as in demand as they were when I was a kid. And those things change. Can't wait to see if we can put an NFT behind them. But at the end of the day, scarcity, supply and demand are going to drive these things. And if players can actually make money playing and getting paid to play versus free to play, I think we're going to see a sea change. So, and that's actually what I have said for quite some time. I've been talking about the free to play and how you're going to get to a paid to play environment. And I think that's an important piece of why these assets are going to drive new marketplaces, engage the next generation of consumers. It's just it's the potential source of income. And as the AIs take over and there's less labor needed in the market, maybe we'll have more time to play and make money playing our games. So just real quick, how does Prasaga relate to this? We're actually building a new blockchain, and it's designed to have a better technological approach to NFT assets. And it's, from its very construction, has fractionalization, the ability to create these marketplaces easier, and then easier developer application support, so that they'll be able to bring these types of great marketplaces to market as well.
Jay,
so
I'll just tell you, we have a question here for you.
Go for it.
Just so we won't forget that. We got like 5 minutes. What are some of the other special rights, drawing, or other rights associated with NFTs?
So again, those are specific to how the NFT is created. And so the main thing is that authenticity and certification that this is what it says it is and is recorded immutably on the blockchain. Now, they can have other metadata that's attached to it. Obviously, you're going to have the creator, many cases, the time it was generated. There's the other things that are probably useful from a value creation standpoint, and those having additional value in the market is the ability to know who's owned them. So if somebody famous has actually owned an asset, an NFT, that is actually part of the historical accuracy of that transaction over time. So you can see, who's owned a piece of artwork, or how it's been traded, how many times it's been traded, what prices it's been traded for in the past. So you get all of that attached to that token, and that just gives us complete market clarity. I mean, when it's interchangeable and it's one stock for another, I don't necessarily care who's had it before, but when it's a discrete, uniquely identifiable item, then that can actually add value to know so-and-so owned this signed copy of this particular baseball card or whatever it is that's now been made into an NFT.
Got it. Anything else you'd like to add?
I think that the exciting thing here for me is that we're creating an entirely new value space. And, especially if I'm a family office and trying to decide, is this going to be part of my portfolio in the future? Am I actually going to have these types of artwork? Well, I mean, obviously, if you've been investing in collectibles over time, then you know how important authenticity is and certification is. So when you apply that to digital in terms of building a collectible, and then looking at what the market potential is for those assets, I think it's a similar type of approach. It's just we're going from the real world to the digital world. And of course, how many different things, I'm not a big trader in sneakers, but now I've got a way to authenticate that this is a unique sneaker that nobody else has. And that's going to drive price. Scarcity and demand is always the supply and demand is always the drivers on this sort of thing. So I'm excited. In some ways, we're democratizing collectibles in the sense that people, especially through fractionalization, can participate in some very expensive artworks, know that they're authentic, and be able to see the return of having part of their portfolio held inside of digital assets and NFTs.
And Jay, two quickly more questions here. How NFTs solve the copyright issue is one, and second, are literary works a viable NFT subject?
So the first question, I've been trying to take a deeper dive because I've had some discussions with some global copyright, because that's the World Trade Organization, a number of other organizations help to work on those types of issues. And I was trying to see if there'd been any larger advances towards the blockchain. And obviously, being able to tokenize a copyright would give you another point of authenticity to show ownership of that. So the creators could be using NFTs to do this. I was looking for a platform that was already in play to do that. I'm sure I'll probably get a number of emails telling me about the latest and greatest now, but I wasn't seeing any of the larger scale organizations that I was aware of standardizing on blockchain yet. But yes, it's going to have an impact. We're still really early. I mean, this is just starting to happen, and literary works, again, it falls into the category of collectible. The bigger challenge with physical pieces of art and collectibles is how do we bridge that air gap between being able to say that certificate that's on the internet that's attached to the NFT is actually also in a near field NFR chip, or how is it we're going to be able to make sure that knowing what we know is recorded with the actual object itself. People have been exploring QR codes and stuff, but a lot of those are just as forgeable as anything else. So how do we create that ability to go from the real world from the physical world to the digital world, and have that NFT proof clearly authenticated? So those are some things that, there's a number of solutions in the market, but they're still early and still getting proven. So.
Got it. Thank you. I see more questions here, but we'll need to perhaps do it at a later session.
Yeah.
Because we have to move forward. So, you're touching a very interesting topic, and we should definitely, Jay, do another one of our sessions just to dedicate it to this topic.
Every time over on Clubhouse, it's the topic of the day, NFTs.
Thank you so much for that. And now I will wait for our next speaker, while again, Zoom decided without asking me to make me red again. I don't know, it's I guess something they enjoy doing. Oh, here we are. So good, what is it, noon. How are you doing?
Hello, Danny. I'm good. How are you?
Great, good to see. I'm trying to find the best way to, I don't know what's going on here. Anyway, so Mike, we've been very fortunate. We know you for a while, for many years. You've been speaking at our conferences and have exciting views about what's going on in this space. And you're going to give us, basically an overview of what's going on in the markets, right? I mean, never a dull moment, as I like to say. That's why we do these sessions basically every other month, because things happen so, every second. You see Tesla pushing the markets high, then he says, oh, you know what, it is expensive, they go down, all that crazy stuff that I think you don't look at. You look at the more strategic, a longer term overview. But maybe I will before you start your overview, maybe I will start by asking you the question you like the most, which I asked you privately before. On one hand, you got Taleb and what's the name of the other guy, and Rubini,
Yep.
and all these guys saying, you know, this is worthless. Cryptocurrencies are not worth anything. It's, I don't want to say the B word, nothing, not $1. On the other hand, and the same week, you can hear, you know, Goldman or whomever it was giving it a 160K target to Bitcoin. So kind of very different extreme views. How do you see that?
It reminds me of that famous quote from the economist Irving Fisher that in 1929 that we've reached a new higher plateau in the stock market. And I'm not so much worried for these gentlemen. They've already made their success in life and they're fine. But I think they're missing out on the potential biggest revolution in money since double entry accounting, in terms of technology since the internet, and maybe since airplanes. And I think the whole world has realized, well, let's not take that risk of being the person claiming there's a new higher plateau in 1929 in stock markets. Let's take the risk and allocate a small portion of our assets to this new digital reserve asset in a world that's going digital. To me, that's what it is. And I don't feel so sorry for them, but I'm really worried how history is going to probably not shine on them too well. And I also look at it simplistically happening now is anybody in the planet who's ever held gold and wanted to allocate gold all knows that, all right, if I'm prudent and I'm a good diversifier, I got to have at least, if I have 100 units of gold, I have to at least have 1 unit in this Bitcoin stuff, just in case it does make my gold redundant. And that's the headline of my latest focus is gold is becoming redundant, at least for now.
Great. So, Mike, I'll let you take over and get your overview of what's going on in the markets. And I see you're in the office, and it's great that some of us, at least, are in their offices.
Well, Danny, we have. I'm one of the few. I have to be here. I just have to be around people, and of course, I work at Bloomberg, so it's a great place. And what's one thing I love about here? I have a neutral bias. If I was bearish in Bitcoin 2018, made a lot of enemies, but hey, that was my view. And now I'm bullish. I want to share my screen here. First, I want to thank you for having me because I really enjoy interaction. I really miss presenting in public because this is the fun part for me, and that is being able to show the stuff that I spend most of my days and stuff and nights, even some of it really early this morning presenting. So what I just published, and I want to thank you for the timing, because you probably knew today was the day I was going to publish my March outlook, which I'm going to show you, just walk you through a few cool charts for cryptos. And you probably knew when you set this up a few months ago that Bitcoin was going to be trading $50,000 today, right around $1 trillion market cap. So I'm very impressed with that. And next time you have a good outlook like that, please let me know so I can put that in my view. So I'm going to go through my outlook, and I'm happy to slow down, pause, or if you want to interject at any time, please let me know.
Sure, go ahead.
Okay, so I think we have 40 minutes or so, but please, anytime you want to, if I get on a rant, stop me, go ahead. But I want to show you my headline for this month. I thought about, one thing I love about when I publish my crypto outlook is I usually spend my whole weekend listening to podcasts and reading and studying, and it's exciting. For some guy who, I read at crude oil, I'm like, yeah, it's kind of boring, it's oversupplied, and then it's being replaced by technology. Well, that's what's happening with Bitcoin's replacing gold. In investment portfolios, it'll always be pretty. It'll be good for jewelry and stuff. But investment portfolios, I'm kind of worried that central bank hoards are starting to worry. So that's my key headline, is Bitcoin making gold redundant. And I thought of this word TINA, that acronym for there's no alternative. And it's becoming like that. The fact that the world's largest automaker by market cap, got to clarify that, Tesla, is allocating some of its wealth to Bitcoin. To me, that was an inflection point. That announcement came out in February 8th. And since that time, I just see Bitcoin's up about 70% on the year. Now Tesla's down on the year. And so I think that's basically a bit of an inflection point that there's a pretty high valuations in equities, in bonds, And we all know gold money is flowing towards Bitcoin. So all the sectors are now all flowing towards Bitcoin. The question is the duration. So let's start with my first. I usually like to focus on pretty charts. Let's give some numbers on it. I think Bitcoin's right now in a $40,000 to $60,000 range. It's consolidated for a while. It's getting into that 60-40 mix. And I think the next key threshold is getting to 100,000. Something has to happen that I can't predict. Some kind of major technology glitch, or Bitcoin should just continue doing what it's been doing for its history. You know, after 12 years, you'd think people like Nori Rubini would say, yeah, maybe I'm wrong. He will eventually, or he'll just fade into redundancy like gold is a little bit right now. So I want to point out, to me, my first key chart is what you see here, and that is it's a chart of Tesla in white. You can see that white. Tesla peaked just above 800. Started heading lower at the same time when we made that announcement. That's when Bitcoin broke above 40,000. The question is the duration of that divergence, and I think it's got strength, and I'll show you why in a little bit. But to me, that's what really flipped the switch lately, and I think that's one of the stories we'll look back upon, is saying, okay, that was kind of a major investment or trigger for Bitcoin going into the mainstream. So I'll just scroll down a few charts a little bit. One thing I just want to point out is there's a big difference in the space between Bitcoin and every other currency. And so Bitcoin is becoming a global reserve asset. And the rest of the space, I see plenty of speculation. People have heard about Dogecoin and things. Oh, there's a lot of them are just bogus coins. Now, Ethereum makes a lot of sense. Not going to dig into a little bit. The most significantly traded cryptocurrency on the planet is Tether. It's a digital version of the dollar. It's basically accentuates the fact that digitalization of money is accelerating the dominance of the US dollar. So what I show you in this chart is just a simple measure of Bitcoin divided by the Bloomberg Galaxy Crypto Index, clearly moving from the lower left to upper right, and I fully expect that to happen. This asset becoming a global digital reserve asset, despite the fact we have a pretty big rising tide in the space, should continue to outperform. It's beta in the space. It's the first one, and that's the significance of Bitcoin. It will never be replaced because it's the only one currency that is completely independent. No one's project, no one's liability. We saw Libra. What happened with Libra when they tried to launch that? It was just everybody's trying to duplicate what Bitcoin has accomplished. So one thing I want to dig into a little bit right now is just mention, I mentioned Tether. Now, we all know recently Tether was, the New York AG came down on Tether and had some issues and said New Yorkers cannot trade with Tether. But I look at Tether as, I'm a strategist. Here's the trend. This is what matters and why. Market cap of Tether has been increasing through the entire bear market. It was one of the only market caps of any currencies that increased in 2018. Okay, so it's mostly traded in Asia, I get it, but the bottom line is the signal is the market wants digital dollars. So what I show you in white is the market cap of Tether increasing close to 35 billion now, and Bitcoin doing the same. Now, I don't think it's driving Bitcoin. Bitcoin's driving it, and it was put it this way. If Tether was going to be, something was to regulate it away and have a major issue, where's all that money going to flow? Bitcoin. Because it's now becoming a global digital reserve asset. So I want to also point out this, I love this concept of people looking for a super cycle in commodities. I'm like, sure, there's a super cycle, it's Bitcoin. It's buoyant, advancing Bitcoin is one thing you have to, I think, point out is like our previous speaker noted, Jay, was advancing technologies is moving, is in that stage of, gradually and suddenly, we're clearly in suddenly stage. And Bitcoin is taken away from gold, and advancing technology is creating more petroleum and reducing demand for it. So what I show you here is the concept of, when people talk about investing in commodities, I say, be careful investing in something that rolls futures. What I show you in magenta is going back to 1990. This is the measure of the Bloomberg commodity index total return. That's the total return an investor would get 180% or so. It's less than CPI, partly because that's rolling futures. Now look at the stock market. It's taken off. If we get inflation, real inflation, the stock market will probably do okay. And then Bitcoin's moving in that space. It's just that advancing technology will always repress commodity prices and things like that. But I want to dig into one of the key indicators I've used for the last few years, and people might have heard about this, and that is the Grayscale Bitcoin Trust. It's one of, to me, my indicators that's showing me that Bitcoin is likely going to get towards $100,000. Now, this is the elephant in the room. It's the most widely, it's actually, in terms of if it was an exchange traded fund, it's a trust, it would be among the top 2% in the world about first trading and market assets. But it's part of the reason the US does not have an ETF yet. And I want to show you a key indicator from this trust. It's been at a premium forever. What I show you in white, that's the Grayscale Bitcoin Trust Premium. It just recently dipped to the deepest discount ever versus the actual price of Bitcoin. So this is the trust that everybody seems to be going to, from institutions to retail. But last time we had a discount similar to this was right around 2017, right around March. The market went to 2,000, Bitcoin did, it dropped to 1,000, got the discount, and then it went to $20,000. So it's an indicative case. So by the way, back then, this trust was only about 1% of the total market cap of Bitcoin. Now it's 4%. So this is somewhat anticipation of an ETF in the US. There are some trusts in Canada that went to discounts, but the Grayscale Trust can also convert to an ETF. So to me, this is the big elephant in the room, indicating, well, if past performance, last time it had a decent dip was right at the bottom here, and the big bottom in 2017. So that's what I show you. And then yeah, in orange, I have the Bitcoin price. So one indication, if this indication holds merit, it's indication that the market has just had some panic selling and it's quite cheap. But also I look at it as when I was at a hedge fund, there's sometimes just so many opportunities in the markets. And I view what happened with GBTC, which is the acronym for Grayscale Trust, versus futures is an arbitrage's delight, because I look at, so if you're an average hedge fund with a normal primary broker, you don't have many connections with, say, cryptos, you can buy this trust at a discount and sell the futures forward, the December futures, at a premium. And then the significance is, right now it's about 20%. At the end of February, you were able to buy the GBTC around the price of Bitcoin around 43, and sell the further out future, the December future, around equivalent price of $53,000. So you've locked in 20%. Yes, there's slippage, there's fees, it's imperfect, so maybe you get 15%. But that's on regulated exchanges. To me, that's an example of how nascent this technology is. It's very bullish for Bitcoin when you can get that kind of somewhat arbitrage profits. And it's also, in terms of what I showed you earlier, it's indicative of the price probably going higher. So I want to dig into exactly why, and some indicators why Bitcoin's replacing gold. It is happening. It's just a question of endurance. Obviously, I'm taking the view that it's going to be enduring because something has to trip up Bitcoin, or it's just going to be continuing to do what it has been. And here's the iteration I like to mention is anybody who's ever held gold knows that now, okay, there's this risk that your gold might become less valuable because of this thing called Bitcoin. So why not just allocate a certain percentage? Every day that goes by that Bitcoin doesn't fail, the money's going to keep flowing that way. That iterations, the dominoes are falling. I don't see what's going to make that stop. And I think it ends at central banks. Why? Because they're some of the biggest holders of buyers and allocators to gold on the planet. And I don't think they want their money to be considered somewhat worthless. So it's just prudent allocation at this stage. So that's what I show you in this chart is in white, that's total ETF holdings of gold in ounces. So it's not distorted by price. Peaked around, looks like it was how many ounces? Around 110 million ounces right at the end of last year when gold peaked, and now it's dropped down to almost 100 ounces. So, dropped a little, like less than like 7% or so. In orange, I show you total holdings of Bitcoins in GBTC. This is near it got to near 700,000 Bitcoins for a while, but the point is it was around 1% of the market. Now it's 4%. The key thing I was noticing last year is this one entity was absorbing 100% of total mining supply. That when it dropped to 900 coins a day, by the way, that's all you're going to get in supply until 2024 by code, which is part of the bullish aspects for Bitcoin. Another key indicator that's more for the technical standpoint is I can't view gold anymore without pairing it with Bitcoin, because I think gold's become somewhat naked if Bitcoin's on it. So I created this gold Bitcoin 75-25 index. 75% gold, 25% Bitcoin. It rebalances once a year. Bottom line is the volatility on this index is what I show you in white is less than the volatility S&P 500. It's running around, I think, around 20%. S&P 500 is around 30%. Now, this is 260 days. So I like to use annualized as long term as possible. Always keep my outlook at least a year. In the meantime, the correlation is zero, and of course, the performance, which I show you in orange, is just the gold Bitcoin index divided by the S&P 500. Started around 1, 2012. As you'd expect, it's outperforming. But at a lower volatility and zero correlation, I take that, go forward. let's go forward. The S&P 500, from a market cap standpoint, is the highest ever versus debt versus GDP. Okay, it's a little expensive. Just a little reversion in that, where it needs earnings. So looking forward, I think this is a way to look at markets. And one thing I think I love the narrative is volatility is too high. I'm like, yeah, it has been. It will be, but it's going to drop. And that's kind of my headline is Bitcoin, there's things you can expect in life, death, taxes, and Bitcoin volatility continuing to decline. Virtually guarantee. It's getting towards gold, and it's actually near Amazon. It's actually below where Amazon was when it was first getting started. And that's what I show you on this first chart. Bitcoin volatility is well on path to drop below where Amazon was. Certainly when Amazon was first launched, it was around 1997. It's what I show you in white, annualized volatility, 207 days, was trading around over almost 120%. Bitcoin, when it first got started, was higher, but now Bitcoin's trading around 60% annualized volatility. Amazon's 40%, not much different. And if you do a simple regression on Bitcoin volatility, it's going to drop below that of Amazon in 2022. And there's a key reason why. Supply is fixed. We know exactly what it is. Every other commodity, asset on the planet, supply and demand are two factors that are uncertain. Bitcoin's supply is fixed. Another key indicator I used a lot last year, and I want to lay a little bit, just point out, is Bitcoin volatility versus gold volatility. That's what I show you in white. That's the 260-day volatility of Bitcoin divided by 260-day volatility on gold. Just dropped to the lowest level ever. It was just around 2 times. Last time that happened was when Bitcoin and Bitcoin was about 1 ounce. It was about, 1 ounce of gold. 1 Bitcoin bought 1 ounce, and that was the resistance from 2013, 2016. Now, if I had time, I'd dig it into. That's where I started getting into the space. I gave up on it when I first heard about it. When it got, I figured out it's never going to get a price of gold. But once it broke above the price of gold, then I became a believer in 2017. But this volatility indicator, even though it's lagging, predicted it. We just had the same thing now last year, so that's why I look at gold. And it was when gold locked up, Bitcoin locked up about 10 times the gold. Been resistance since 2017, breaking above that now. What's the next level? 100. So that's why I'm just looking for Bitcoin. Just do what it has been. This indicator shows it should. Fundamentals, technicals all point to it. It just should continue doing what it has been doing. And getting towards the end of what I want to say, and we can dig into a few questions or whatever you want to do with that, is this is one of the on-chain metrics I've started using more recently that I enjoy quite a lot. I get this from Coinmetrics, from the gentleman there, and it's an indication of motivated sellers. And the metric is Bitcoin 1-year active addresses. It's best way to look at it is in terms of in white. That's the Bitcoin 1-year active addresses. The last time it dropped to a similar level, which was not nearly as low as we reached here, was right around the onset of the big bull market. It started at the end of 2015, beginning 2016, which was the last halving year. We had a halving this year. And the market didn't peak until we got the 1-year supply really got above 55%. Now we're nowhere near that. So one of the things, metrics I'm looking for is every indication of excesses, a peak in the market. Something's going to tell me the market's too high. Or, the classic case in markets and certainly commodities is a cure for higher prices. Higher prices ain't there yet, as far as what I see from at least from this indicator. So that's kind of the key thing I'm on watch for all the time. Is it a peak? And I kind of backed off a lot of my technical indicators because I see an absolute tsunami of fundamental allocations, and every day it's basically that pace of people bringing realizing that Bitcoin is actually legitimate. So I want to finish on this slide, which I think shows the macro picture in the big picture for Bitcoin. Demand's favorable. supply, and then have the macro. So one thing I want to point out clearly in white, that's the annual percentage increase in Bitcoin supply. The significance of this year is because of the last year's cut in supply and halving. It's going to drop below 2% for the first time ever. 2% is significant because in history of gold, that's been the average increase in supply, around 2%. Last year, it actually dropped because of issues, but it's clearly going to pick up this year, certainly for anybody who's hedged forward. And by the time we get to the next cut in supply, which is when we're going to go from 900 coins a day, guaranteed, to 450. And recently, there was actually a little bit of an issue with mining out of Mongolia cutting back, which made it kind of fearful that we actually might have less than 900 a day. I think it's unlikely it'd catch up, but you can't have more. So supply is clearly going down, okay? What's going with demand? We all know what's happening in demand. One way to measure the size of the network, when people say it's not tangible, I say, well, this is a digitalized world. How do you measure tangibility? Like you do in electricity and things with volts and amps and watts. What I show you in white is just a simple hash rate, clearly moving from a lower left to upper right. And then the macro is G4, central bank balancing, so the percentage of GDP, pushing 60%. The point is, what are the trends? Supply is declining. The size of the network, global GDP, and global QE, clearly moving from lower left to upper right. And I want to finish with what I show you in these circles. There's the two biggest years ever for Bitcoin were after the halvings. Well, we had a halving in 2012, 2013, the market increased 55x. And then the next halving was 2016, the market increased 2017, 15x. And what I show you in this chart, this is 2013, 55, 2017, 15. Big years. What's this year? It's a rounding error. It's nothing. It's closing on 2x, getting there. But that's why I view modestly, I think we can easily get to 100,000. And what's the risks? Well, I don't see it going much below 40, as I pointed out. I think if we have something I can't really predict, like some kind of major technical glitch or something like last year, major risk off, I think it could get to near 30. I think that's very much the downside, but I see Bitcoin kicking in towards 100,000 and just hanging out there for a while like it did at 10,000 from 2017. And that's my outlook for this month, and I'm happy to go with any Q&A or wherever you want to go with that, Denny. You probably got yourself on mute.
Denny will be joining us just in 1 second.
Okay. Well, and when if there's any other questions, I can't really see them now, but I can go wherever we want. I can dig into a few other things I've been looking at, or we can go with Q&A. Any thoughts?
Well, just 1 second. I think I have a couple of questions here.
Yeah, let's do that.
Well, 1 second.
I'll stop sharing the screen and maybe I can see them too. Let's just do that. Stop share. Go back to here. Q&A. Boom. Okay, so let's do this first one. Competition to Bitcoin. Yes and no. It's a unique concept. First of all, let's look at the facts. There'll never be another Bitcoin. Partly that's completely independent. No one else's liability, no one else's project, organically developed on a global scale. I don't think that's ever going to happen unless there's some kind of new technology we can't predict. Now, there's been many attempts. Obviously, we heard about Libra, and then there's 8,000 wannabes. But that's why I look at, there's going to be a lot of cryptocurrencies. Just bring up there's a lot of, there's a lot of different ones. The way I look at the market is there's Bitcoin, global digital reserve asset, and it's very hard to knock it off that throne because there'll always be someone else's project, like Libra was someone else's project. And then we have Tether. Tether is the most widely traded cryptocurrency on the planet. Its volume is double that of Bitcoin historically or lately. Let's look at the latest volume I see in CoinMarketCap. It's 100 billion versus Bitcoin is closer to 50. And then we have Ethereum and everything else. Everything else is 8,500. Ethereum is the leader, and it has earned that. DeFi, decentralized exchanges, non-NFTs, and for a previous panel, fintech, and the platform for it's definitely, but it's got a lot of competition. So I view it as if the whole space has a big problem, if there's major regulation, you can do what you did to XRP with the other 8,500 to some extent, with the regulators coming down on XRP, but you can't do it to Bitcoin because you can try to ban it, it'll just enhance the value. So that's why I view it as, I don't think it's hard to, there's competition, but replication hardly, I don't see how we can ever do that. Now, there's copies of my presentations all available. I posted it on the web. The Bloomberg Crypto Outlook is all there. You can get it there. And I'm happy to go if Danny's back, we can speak, or we can have any Q&A, wherever you want to go.
No, you can.
Well, there's another question here I see. What is the current energy cost for each Bitcoin transaction?
Can you repeat that? Something about energy costs or something?
Yeah, there's a question here asking, what is the current energy cost for each Bitcoin transaction?
I don't know exactly what the energy cost is, but I love this subject, this topic, because people claim, oh, it's very not green. When I had the honor of interviewing Kathy Wood of ARK Investments last week, she said actually it's somewhat the opposite. The claim that Bitcoin, first of all, I don't think you should be worried about transaction costs too much unless you're trading and transacting a lot, and that's not my space. I look at Bitcoin as something you should hold and accumulate. It's a collectible. Traders, that's your problem. Good luck with that one. And there's also a bunch of second layer solutions. But as far as its electricity use, every advancement in society and mankind has always used different and advanced forms of electricity and energy. And Bitcoin does that, but it does it in decentralized basis. That's actually very good for humanity, i.e. hydroelectric. It's typically very much isolated from population bases. So you'd have to run pretty significant infrastructure to get that electricity to where it's used. You lose a lot of the power, and it's very cost ineffective. But using Bitcoin to mine decentralized and actually using that revenue to create like localized solar production, and it's quite good. Also, it's solving the problem of gas flaring, and it's one of the most unique examples of just pure capitalism and democracy on the planet. It just migrates to where it's cheapest, and so I think that's a good way to address the actual energy consumption. By the way, when we went from horses to steam engines, did we go back to horses because steam engines use more energy? I don't think we're ever going to do, even airplanes. I don't think, or in automobiles. I don't think we're going to do that.
We have more questions. Hey, I saw you guys. You asked. We answered some of them. If various governments require Bitcoin wallets to be registered with legal ID and address, what will happen to Bitcoin value?
That's a good question. They might do that. I don't know how that could happen. I don't know if it really matters for volume because, as I point out, the most widely traded crypto on the planet is Tether and it's our digital dollars. Bitcoin is the kind of thing people, I think, and certainly the buyers now, are not thinking of trading, and they're hoarding, they're accumulating. And you'll like gold, to hold it as a reserve asset, as Michael Saylor said, to potentially never sell, or as Warren Buffett says in stocks, you buy one to never sell. So sure, that could be a problem, but I think that's where regulation in space is very much welcome. It brings in more of the institutions, which is just a trickle right now. I mean, the big institutions. It's still only $1 trillion. It's not as big as, you know, what is the total market cap of the stock market? Is closer to 40 trillion or so. But increasing regulation in the whole space actually enhances the value of Bitcoin in many ways, because you can regulate easily those 108,500 because there's someone else's liability, someone else's project. Just like XRP, there's someone you can go to. With Bitcoin, there's no one. A lot of this regulation in the whole space enhances the value of Bitcoin's independence. So as far as the wallets, I don't know how that's going to affect it. I don't think it's going to make too much of a difference. But that's the thing we have to have to expect. If you're investing in Bitcoin and or holding, expect, okay, something like this might make the price drop 40%, maybe 50%, but that's just part of the game at this point. At some point, it's going to get to that higher plateau. Volatility will settle in, and it'll probably be less than volatile than gold, but probably from much higher price.
Mike, I see more questions here. What are you watching or concerned with BTC coming under pressure from foreign governments who are in the process of launching their own CBDCs, like India? That's one. And then they keep on asking, appears the US Federal Reserve is helping to orchestrate new narrative that BTC is at odds with ESG, uses too much energy and all, but we talked about that part. So I guess that's the question I have for you here.
CBDC is a good question. First of all, it enhances the value of Bitcoin. Let's look at this objectively and openly. Bitcoin's independent, no one else's project or liability. Let's look at the potential for a Chinese CBDC. It's just a matter of time. It'll allow them to track every single transaction their citizens make. If you make a donation to the wrong person, good luck. If you buy the wrong product, good luck. But it's part of an authoritarian communist society. Great. I don't think the people are going to like it. It's not going to work so well in most of the rest of the world where we have privacy rules. What's happening organically in this space is the most widely traded cryptos on the planet are digitalized dollars. It's increasing the dominance of the dollar. Digitalization of currency, because it's just a global currency. So I think it enhances the value of Bitcoin, and even if China, like China has restricted its use, in some cases banned it, it's actually enhanced the value, because that makes people realize, and this is something I want, because if I know my authoritarian oppressive government doesn't want me to have it, there's a reason for it, because they're, you know, we all know what's happening with Z. He's actually a dictator. When you hear these stories about, I guess I read the New York Times a little too much, about cleaning up corruption, that just makes you take out people who disagree with them. It's very simple. So back to, I think the facts are, digitalization of money is enhancing the domination of the dollar as a global reserve currency. And Bitcoin fits in there very well as a global reserve asset. The trend's clear. It's a fact, it's the trend's your friend, and I don't see why that trend should end.
Comments on BSV, which trades much faster and cheaper?
Someone else's project, someone else's liability. There's 8,500 that are better than Bitcoin. Trade them all you want. They're great for speculative digital assets. Some of them are going to do very well, and some of them will really fit in with DeFi and NFTs and things like that. But there's a big difference between these assets that accomplish something in terms of the actual infrastructure of the market and then the global reserve asset like Bitcoin. So I don't look at them too much. I watch the top few. Ethereum. I watch, basically the main thing I really watch, as I showed in my presentation, is Bitcoin versus the Bloomberg Galaxy Crypto Index. The key thing I like about an index, as far as something maybe moving in and succeeding, is an index has survivor bias. I mean, we all know, you watch cryptos over the last 5-10 years, the top 5-10 have changed so much that survivor bias really will benefit an index. And when it's properly managed, like I think the Bloomberg Galaxy Crypto Index is, we'll be able to pick that up.
Your thoughts about Ethereum? I know you mentioned that in your presentation, but that's one of the questions we have here.
I like the narrative from Raul Paul that Ethereum kind of looks like Bitcoin did in 2017, trading around just below 2,000, like Bitcoin did. Can easily do what Bitcoin did, but it is part of what the world, and certainly Wall Street and finances, realizes. The world is going digital very fast. And one thing that's really happening is you look at things like Uniswap and all these tokens, ERC tokens, and all this space in NFTs. Ethereum's the go-to. It's got a lot of competitors, but I see it rising, a leader in the rising tide of digitalization of money. But it's never going to be a global reserve asset like Bitcoin.
Now, John mentions here, as a follow-up to his question before, for later and perhaps offline discussion, your comments read BTC and ESG appear valid, at least to me, but my point was more that the US Federal Reserve employs 88,000 very educated British regulars whose sole purpose is to manage the value and prospectus of USD as a reserve currency. They have a de facto unlimited budget to do this. So I suppose more of a philosophical question for which welcome any insight. In this case, is truth enough to oppose or survive such arguments, etc.? So that's his remark.
Well, just the fact of Bitcoin was the first blockchain asset, the first digital currency. Now there's 8,500 cryptocurrencies. The #1 traded cryptocurrency on the planet, I will repeat this, is a stablecoin Tether, the digital dollar. So digitalization of money is increasing the dominance of the US dollar, which was earned over time, and as my son's shirt likes this, I love his shirt that says two-time World War champions. So I don't think anybody has to worry about the dollar losing its dominance. And most notably, the countries who really are despising the dollar dominance, i.e. China, Russia, they're also, digitalization money is already making that harder for them. Dollar is just winning that game. Bitcoin's part of the space, like I said. Tether is right now double the volume of Bitcoin. So it's just an organic move that dollar works, and we're just moving in the next way to transact in dollar. So that's a fact.
Thank you, Mike. You actually gave me a second to get out and see sunshine, because I'm stuck in a basement right now in Rye, rather than our beautiful offices at the World Trade Center. So it's been exciting as always, to hear you, and I definitely want to have you again, hopefully our next online event. And we should talk about our in-person event at the World Trade Center, where Larry Silverstein will be speaking. And I believe that's not too far from where you are. So maybe just last question coming here. I've worked with various international governments in Latin America to pass legislation friendly to cryptocurrencies and NFTs. It's interesting to see so many people focused on the utility, but almost no one focuses on the legislation. We'll talk about it later on, which I believe is much more important, as it validates everything else associated with the technology.
Well, I think that point is, the question is very clear, especially from where he's coming from. I have a colleague over here from Zimbabwe. And we all know what happened with that currency. He likes Bitcoin. So I'm American. We have for us, like Wences Caceres says, for us, money is like fishes, like water is to a fish. But for the rest of the world, Bitcoin has a lot more utility value. So legislation, sure, but that's the key point about Bitcoin. There's 8,000 cryptos. The U.S. just came down on XRP. It was knocked out of the Bloomberg Galaxy Crypto Index for a reason. How are you going to legislate against Bitcoin? You can ban it. Good luck. It enhances its value.
Great, Mike. So I highly appreciate this. It's been great, and I'm looking forward to seeing you next time with us.
Thank you. I'm looking forward to. Thanks for having me.
Thank you so much. So now we're moving on to our next session that's going to be talking about the regulation side of things. And while our panelists are joining, I will mention that we've had the pleasure of having Donna here with us. She will probably join any second now. And she basically built the conference today. So thank you, Donna. I take the credit. I always say it's our conference, but it's not really today. It's been a great working with you. And just a couple of words about Donna, and she will introduce her panelists. Donna is a businesswoman, a professor of blockchain digital assets, and an angel investor and a philanthropist. She was the managing director of the World Economic Forum, the foremost global organization combining business, political, academic, and other leaders of society committed to improving the state of the world. She was the first woman to chair a USA exchange. That's very brave of you, Donna. I read Leg the Spread. I read that book, and I know that's not an easy task in general in that world. Ms. Rattle began a second career as a New York City-based advisor and investor focusing on financial technology, blockchain, and emerging technologies. She's an active participant in the startup community with New York Angels, serving as a board member, the co-founder of the Blockchain Committee and co-chair of the Israeli Investment Committee. Oh, I didn't know that. Ms. Rattle developed and is teaching at Fordham Law School 2 courses on blockchain, cryptocurrencies, digital assets, as well as DeFi and smart contracts. Highlights of Donna's committee membership in the NYS Committee for the Advancement in Leadership in Financial Services Finance, the MoMA Photography Committee, a board member of the Wall Street Blockchain Alliance. The focus of her public service efforts are the arts, health, and promoting women's leadership. Thank you, Donna, for being with us, and I'll let you take it from here and introduce your panel and panelists and topic.
Well, I have the pleasure of having one of the most distinguished panels one could have on regulation in the crypto blockchain sphere, and I will let each person introduce themselves because their backgrounds are so immense, and I don't want to misquote on any single one of their accomplishments. I also want to underscore the diversity in the panel. We have a guy. And no, I want to, and thank you very much to Denny in making this possible. And so why don't we start with, we'll let gentlemen go first. And Andrew and Drew, why don't you introduce yourself, and then we'll get through to talking about the very difficult topic of regulation.
Thanks so much, Donna. Good afternoon, everyone. My name is Andrew Hinkis. I'm a lawyer in Miami, Florida. I'm also an adjunct professor at the NYU Stern School of Business and the NYU Stern School of Law. I'm also on the faculty of a university in Bogota, Colombia. I teach a class that's called Digital Currencies, Blockchains, and the Future of Financial Services, publish textbooks on the law of crypto assets and blockchains in the United States, publish academically, represent clients in a variety of areas in the space, and also work with law reform organizations, both domestically in the United States and multinational organizations, trying to figure out how to make digital assets make sense in commercial law. It's a pleasure to be here with everybody.
Sorry, Alta, why don't you go, and we'll leave Rebecca for last because she has some exciting news that she can announce.
Sure. Can you guys hear me first? First of all, that was a great introduction. I'm very happy to be with all of you here today. I'm adjunct professor at Chicago Kent College of Law, where I lecture blockchain and also antitrust law. I'm also an attorney by background. I practice intellectual property and fintech, and of course, I serve my clients in the blockchain practice. And very excited to be in this space. I think it's been a very rewarding space as well. And I think that at this stage where that we're facing with cryptocurrencies and cryptocurrencies adoption, I think considering the legal and regulatory issues is super important. So very happy to be in this panel today.
Well, Rebecca, you get our congratulations first, and then you can tell us why you're saying that.
Thanks, that's so nice, Donna. So my name is Rebecca Rettig. As of Monday, I am now the general counsel of Etf Holdings, which is an open source software development company that created the Aave protocol, which is a liquidity protocol that allows for the supply and borrow of a variety of digital assets, and also allows you to generate interest on any digital assets that you've supplied to the protocol. Prior to joining Aave, I was in private practice. I've been working in the blockchain and crypto space for about the past 4.5 years, doing litigation and dispute resolution, as well as regulatory enforcement work, and doing regulatory counseling for blockchain and crypto clients. And in the past 2 years, I've been working and focusing on the decentralized finance space and what that means, and helping sort of bring DeFi into a world where we can at least think about regulation and law and how it intersects with DeFi.
Yeah, and all of us, we speak to each other quite often. And all of us, if we were doing this panel a year ago, which probably might have been in person, but if we were doing it a year ago, we would not be spending a lot of energy talking about DeFi. We probably would, in passing, mention NFTs, and we would focus more on the cryptocurrencies that have been traditionally at the forefront, and a number of the different issues relating to the SEC. We now have a completely different marketplace, much more institutional. It's grown much more in terms of family offices and all kinds of intermediaries, including JP Morgan, Guggenheim Partners, and many, many, many more, making headlines about how they're investing and thinking about cryptocurrencies. So for a level setting of where we are in the landscape legally, I'll turn to Andrew Hinkis, Professor Hinkis, to give us a little bit of an update, and then we'll go around and do some other interesting subjects.
Thanks so much, Donna. So starting with Bitcoin's arrival in 2010, it was basically living in a netherworld. It didn't have any laws that specifically applied to it, although there were a number of laws that applied to the different sorts of business activities you could engage in with crypto assets. But there was little fanfare, little awareness, and little desire on the part of any regulator or law enforcement agency to look at these assets. They simply weren't material enough in their value or their use to hit their radar. Fast forward to 2013, and we saw FinCEN, which regulates money transmission, become aware of their use and start to come up with guidance. 2014, we saw the IRS take the stage and give clarity as to how the IRS wanted US taxpayers to pay their taxes for transactions engaged in with these assets. And then around 2017, we had the first arrival of the SEC on the stage. They addressed the collapse of a smart contract investment venture called the DAO. I won't bore you with a specific case holding or a specific approach, except to say the regulators showed up and said, these are the rules and this is what we want you to do. For tax purposes, it worked reasonably well. FinCEN, I think, has done a fantastic job of creating rules that make sense, that demonstrate an awareness of how these assets actually operate. And their guidance is probably best in the business, so to speak, in the United States. The SEC's approach has been different. They did not come out with a set of rules that bind. They didn't pass any laws through Congress. There hasn't been formal rulemaking. There hasn't been binding guidance. What they have done is publish one Rule 21 investigative report, which laid out their policy, which is they're going to view most tokens sold for investment purposes as investment contracts under the Howey test. If you're a lawyer or you've hung out with crypto people, you've heard of the Howey test a lot. And subsequent to that, they have more or less explained their policy through a series of enforcement actions that were settled, where the orders were written in a way that's intended to broadcast to the legal community what they want. And the result is it's been really difficult for lawyers to give their clients any certainty as to how they can issue these products. It's resulted in most products in the United States being issued as private placements, which obviously are not as liquid as public offerings and have more or less not been the benefit of open market liquidity. And it's either pushed the sort of open offerings we saw in ICOs offshore or into those secondary private placement offerings. What we've also had in response is the use of accepted market structures in order to provide access to these assets. We've seen trusts that start as private placements, issue shares where a share corresponds to a certain amount of a crypto asset held by the trust. And then after a certain time, those unlock and become publicly tradable, and those have been very popular. There's a product called GBTC, which has been probably the most successful of these assets. Another similar product called OBTC is coming online shortly. There have been others that have taken slightly different approaches. Some of these sort of trust structures have looked at indexes of popular products. BITW, offered by Bitwise, is one such product. It offers access to a weighted average of, I think, the top 10 crypto assets that are out there. Now, these structures aren't new necessarily, and they have been tried before, particularly in foreign markets. Sweden, to my knowledge, has had an ETN, an exchange traded note, available since 2017. And there were efforts to offer that ETN in the United States through what was called a K-share, but it was quickly squashed by the SEC that was concerned about marketing language and the potential for confusion by purchasers in the US markets. What we've also started to see is other ways of getting assets to these assets. Some publicly traded companies, Overstock being one, were trailblazers and were holding these assets on their books for years now. If you go back and look at the 2017 Ks and Qs filed by Overstock, you'll see that they disclosed holdings in not just Bitcoin, but a variety of assets for years. Probably most of you are aware that both MicroStrategy and Tesla have subsequently taken very significant stakes in their non-operating capital in crypto assets. And it has done wondrous things for their valuations and popularity. This is part of a bigger sort of meme-driven economic series of forces that we've seen at work, which are kind of interesting. But the result of two significant companies like Tesla and MicroStrategy holding these assets is that all the other vehicles that hold Tesla or MicroStrategy also are derivatively giving you exposure to these assets. So Arc Innovation's got an ETF that it holds Tesla. So if you hold Tesla, you hold some Bitcoin. There have also been products that give you access to a variety of companies, some of which have gone public through reverse mergers like BLOK. And this will give you access to some of the centralized companies that offer cryptocurrency products as well as mining companies. You can also get access to these assets by trading futures, both on the CME if you want cash settled or on backed if you want physically settled. And finally, we've started to see products that kind of go beyond what the regulators have looked at and try to create new products that sort of mimic Bitcoin, but evolve. Instead of just having peer-to-peer asset transfer where you're not using typical intermediaries, we now start to get financial conduct, like borrowing, like lending, like securitization that occurs without typical third-party intermediaries.
So I'm going to move over to Alta. And we just had yesterday, Alta, the hearing, the approval before the Senate, hopefully the approval of Gary Gensler, who will run the SEC. And as we left the Trump administration, we had some proposed onerous rules by FinCEN, and we now have a new administration. What kind of attitude do you think they will have? I know you and I wrote some articles about this. What kind of attitude do you think they will have? And what do you think is the possibility of what people think of as the Holy Grail, an ETF coming into the US? We've seen one recently, two of them actually recently approved in Canada. They exist also overseas. Can you give us a little bit about what do you see now? And I know we don't look into crystal balls, but what might be some expectations in the future?
I think that for the new administration, first of all, they are joining in this era of cryptocurrencies, where definitely it's a little bit more exciting than it was previously. I'm personally very optimistic about this new administration. And yesterday, for the people who are watching, so our future, assuming that he's going to get nominated, he did a great job yesterday speaking in front of the Senate Banking Committee. I think he was very careful to kind of keep that balance between promoting new innovation, but also emphasizing a little bit more protection, investor protection. And I think right now it's about time to promote this innovation in capital markets, because I suspect that this new administration definitely is going to be more observant to promote those new products. Maybe they're going to be a little bit more careful on what sort of products they're going to promote, but I expect them to be a little bit more proactive as well. I think that with the blockchain technology, as not only as attorneys, but as academics as well, we always think that it's one of those technologies that definitely get adopted faster, but in the sense that we have so many regulatory bodies, I think maybe that adoption doesn't translate that well into the regulatory regulations. I like the fact that Gary is a very Bitcoin savvy guy, and he also teaches in the cross section between financial and finance and cryptocurrencies. So I do think that he's going to be very careful, as I said, and concentrating mostly on investor protection, crypto custody, ensuring that regulated entities have that sole control over private keys for digital assets. It's going to be interesting to see how they're going to approach consumer protection as well. But in this perspective, I think that both SEC and other regulators are going to concentrate on consumer protection. And here I would like to mention even the other nominated guy, Chopra. He's nominated to be the next director of the Consumer Financial Protection Bureau. But considering the background that he comes from, Federal Trade Commission, I think he's definitely going to concentrate more on consumer privacy, enforcement penalties. It's going to be interesting also how the new administration, or especially SEC, is going to react. We do have a big lawsuit right now, the Ripple lawsuit. Gary has been quite outspoken about Ripple previously, so we have to see how that is going to interact. And as Drew mentioned, especially when it comes to the new product, I mean, and especially CBDCs, I think it's going to be interesting to see how they're going to approach the central banks, because the perception that I got from reading what our future chairman mentioned previously was that he really would advise the banks, first of all, to be able to consider what sort of products to deliver and whether or not they should rely on a blockchain platform. I think that for the new administration also, what happened for our listeners, if they're familiar with the GameStop saga, I think it's going to be super important for the new administration to address those questions about the number of these Wall Street practices, such as short selling, whether the business model of this online trading practice practices or platforms is going to be investor friendly. And I think that this is definitely going to represent some more complex issues for the SEC and for the other regulators. The question is that all these dynamics that we are talking about today, they play across many digital platforms, but at the end of the day, we're going to see how the administration is going to approach this regulatory aspect.
Before I go to Rebecca, I'm just going to elaborate on two things that you said, and it's kind of dovetails right into the world that she's now firmly immersed in the decentralized finance. We saw a kind of, quote, collision between the values of traditional Wall Street, GameStop, and also cryptocurrencies in what happened a couple of weeks ago, in that cryptocurrencies deals mostly in a decentralized world. We're not saying that every single protocol is completely decentralized, but they try to achieve that. And they try and work more in a democratic process across the board with instant settlement. And what we saw in GameStop was what happens when you have a centralized authority, DTCC, when you have a two-day settlement, et cetera, and you saw the values of cryptocurrency, meaning smack in the middle of what should be for potentially the future. And on that, I'd like to move over to Rebecca and talk a little bit about what is DeFi, what is going on with yields, and how people can get outsized returns in today's world, in which yields are, in many instances, negative.
Yeah. I'll just say it's very daunting to be on a panel with two professors because they really speak so well and so eloquently and in such an organized way, but I will try to follow that well. So DeFi stands for Decentralized Finance. It is a movement that is looking to move the legacy financial system into a more disintermediated and decentralized world. So it takes, I think Bitcoin, and we talked about this briefly on a panel last night as well, but I think it takes the concept of Bitcoin, where you do not need a trusted third-party intermediary in order to transfer value from one person to another, and expands the concepts to more complicated economic concepts that we see a lot of in legacy finance. So the best way to think about it is just through examples of some of the larger types of protocols. One is called an automated market maker. Some people refer to it as a decentralized exchange. That's a way that individuals or entities who have wallets can transact and trade and swap the different types of digital assets one for another without having to go to a centralized exchange or without having to use any type of third-party intermediary in order to do it. I think I'll take one step back and just explain that the way this is all happening is through software that is being developed. So when we talk about a decentralized exchange, it is really individuals with wallets interacting with smart contracts that have been built and deployed onto the Ethereum blockchain that allow people to engage in these different types of economic transactions. I'll get to the full part of your yield question in a second, Donna, but it also, then there are what Aave is, and there's another protocol called Compound, these types of interest rate protocols or liquidity protocols where you can deposit your crypto assets in them and start earning interest on them, and also borrow against your crypto assets that you've included in them. There are other types of protocols that are continuing to be developed, which are derivatives protocols, swaps, options, different types of commodity-based protocols as well. And so it's really looking to move the legacy financial system to a world where we do not need third-party intermediaries in order to engage in economic transactions. And I think it really brings a few points home. And I just want to talk about what motivates DeFi before I get into the outsized yield point, which I know it was probably interesting to the audience here. But the real motivation behind DeFi is the concept of transparency and the ability to see all the transactions that are going on in any platform at any time, because these are all, as I said, built on the blockchain where everything is transparent. And so you are able to make decisions about pricing and about other types of transactions you're going to engage in, because you have all the information available to you. And so I think transparency is a very important point. And I think it then leads to, people talk about sort of leveling the playing field and that there's more financial inclusion in DeFi. I'm not sure we're there yet, just given how early we are, but I think it will allow for a more independent wealth management where this story is sort of a hit or miss, but I thought it was really interesting because I went to physical therapy yesterday, and it's like a sports physical therapy, and literally all the sports guys who are in their late 20s, early 30s were talking about crypto and investing and what digital assets they were buying and what platforms they were using. And I turned to my PT who knows I'm in crypto, and I was like, this is so crazy. She's like, it's been like this for at least the last 6 to 9 months. And she said after GameStop, it's literally nonstop crypto all the time. So we're still in very early days, but I do think it is taking hold in a new way, given everything that has been going on in the world. As for yields, there are a number of different types of protocols. Aave is one, Compound is one, and there are a number of others as well, where you can earn both decentralized. So I'll talk about those first, although there are centralized ways to do this as well, but where you can deposit your digital assets into the protocol and earn interest. And the interest rates are set really by market forces and by the rules that have been coded into the smart contracts to fluctuate and set the interest rates. So if you're holding ETH, you can go look on any different number of types of user interfaces and figure out where you can earn the largest amount of interest right now on your ETH. So you don't have to just hold it in your MetaMask wallet and let it sit there, but you can literally figure out, and I'll get to sort of the easy way to do this in a second, just put your ETH in there and let it sit and earn interest for a period of time. Sorry, go ahead, Donna.
Would you give people an indication when you say interest rates, and they're thinking in the world of 1.5%, what kind, generalized, and interest rates are you talking about? And how do these interest rates also get paid? Do they have to commit to a year, like a CD, or what,
Sure.
or that kind of thing? Just a
interest rates can be very low, as you said, 1%. They can also be up to 15%. I've seen they can be very high and much more outsized than what you'd expect if you deposit it in a bank. Let's say, just based on, as I said, this market forces concept, you can deposit it depends on the protocol, but in most of these different types of protocols, you can deposit, they're all what are called non-custodial. So because this is just software and there is no third-party intermediary, no one is overseeing your crypto. They've been obviously audited for security purposes, so you should feel secure about depositing them. But you don't have to commit for a year. You don't have to commit for a month. You don't have to commit for a week. You can put your ETH in, earn a day's worth of 15% interest, and pull it out if that's what you really want to do. When you deposit your crypto into the protocol, you get a token back as well. So when you deposit it into Aave, you get an A token. When you deposit it into Compound, you get a C token, which is like a receipt, which indicates both the amount of the type of digital asset that you've deposited into the protocol, as well as the interest that you are generating over time. So once you return or burn the token receipt that you've received, you will receive back the original amount of crypto and then the amount of interest you've earned over time. The other thing to keep in mind, though, is that the interest rate isn't locked the day you put it in. So you're not going to keep earning 15% interest if that's what it was that day. The interest rate will fluctuate and the protocol will keep track of the interest you've earned over time. And so, you could have it 15% for 6 months and then 3% for another 6 months, and it will just change from day to day, but you will continue to earn interest as long as your ETH is deposited or your digital assets are deposited into these types of protocols. So that's a decentralized way to do it.
And I've heard you, and anybody in the group can chime in. But I've heard you before, and I don't know if in your new role you take the same positions or you do disclaimers on things. But I've heard before you say to people that just because it's decentralized doesn't put you completely out of the regulatory ambit. So, and any one of you can jump in on this, but so this is relatively new, and a lot of the protocols are what I would call experimental. So, people need to be careful and actually do their homework and analyze the protocols. But where does, for example, the SEC or some of these are lending and borrowing, where does the various banking regulators fall in under this, or is it just now, what is there now, about 20 billion or
50?
Or how much
50.
is locked up? Billion. Okay, 50 billion is locked up. So are the regulators watching?
Yeah.
Okay.
So I'll speak very briefly and then let everyone else talk too. Just because I have a different role in-house, I'm still the same person. So my beliefs have not changed. Decentralized does not mean unregulated. It means lots of different things depending on the level of decentralization of your protocol, which is what I have always believed. But the regulators are definitely watching and are really keyed into it, especially after this summer when DeFi really took off, and given the amount of total value locked in all of these DeFi protocols, the regulators are watching, and I would say have been at least for the past 9 months to a year. None of them have taken a position on DeFi in particular. I think we could argue that the SEC has at least given some indication of their position on decentralized protocols in a enforcement order against what was then called a decentralized exchange called Ether Delta and its founder, Zach Coburn. I would argue that given the facts that were presented to us in the enforcement order about Ether Delta, it was not a decentralized exchange because it was run by one person. There was a centralized order book that was run by the founder. The founder made decisions about which assets to list on the exchange. So it was really run by a centralized party, even if the software was running in a decentralized way.
It was a while ago.
Yes, it was quite a while ago. It was in 2018, maybe 2019, but
when crypto was like, worse than dog years. It's a long time ago.
Yeah, that's true. But yeah, so we at least have some indication of the SEC's views on what decentralization means for a type of protocol and how to think about it. I will say anecdotally, I think that certain regulators are starting to take more serious action or think more seriously about protocols that are engaged in what we sort of call decentralization theater, where they say they're decentralized, but they're really running in a centralized way. I don't know if it's the SEC per se, although I've heard about some things there, some things at the CFTC level, but they are definitely thinking about it. They are educating about it. SEC Commissioner Hester Peirce spoke about it last week, maybe 2 weeks ago, to say that DeFi really needs room to grow and expand. But I think that there are a couple of things. One, we have regulations that are pretty clear and that we have to take seriously in the space and consider how they may or may not apply given all that we do and the way that if you're creating the sort of decentralized financial world, there are tons of regulations, CFPB, consumer protection, as Olta said, that and SEC, CFTC, and then banking regulations like the Bank Secrecy Act, AML, KYC, things like that. We have to take those seriously and think about how they apply. And one last thing I'll say, and then I'll pass it off to everyone else, but something I've been talking about for a long time is that these regulations all apply to people. The word in all the regulations is person. Person is defined in the regulations as either natural people or some type of entity, including unincorporated organizations, at least in some of the SEC regs. And so you really, in some level, the technology may not qualify as a person, but if you have people who are really continuing to build these protocols and are actively managing them, you're a person for purposes of these regs. And so you really need to think about it that way. And I'll let everybody else chime in now.
I'll let Drew chime in. And then, because we've also spoken about the other panels talked, or persons talked about NFTs, and there'll be a panel of some of our friends after this in the NFTs. I want to touch on some of the issues that might be there. Rebecca brought up KYC, AML. Alta is a specialist in IP, so I think we can circle around and like just open up the conversation. So Drew, do you want to add on to anything? I'm sure you do that Rebecca said, and then maybe we could talk a little bit about NFTs, and Alta can bring in some of her expertise on IP there, specifically in some of the tokens and what they may not have, where the IP may be residing, as opposed to where it's being purchased. Okay, Drew, everybody just can chime in, talk amongst yourselves. Drew, you wanna chime in, Drew? You have to unmic yourself. Can you unmic yourself? Or otherwise we'll just go to Alta first. And Alta, can you unmic yourself? Can you hear me? Yeah. Why don't you, you know a lot about KYC, AML, and of course, IP, and then we'll circle back to Drew. Why don't you talk about some of the things you're looking at from IP back to NFTs. Also, we've had some robust discussion ourselves on the KYC AML issue on NFTs and where there may be some problems there.
First of all, I just wanted to add a little bit to Rebecca's point, because I agree with her that definitely, I mean, regulators are looking, and this doesn't apply only to DeFi, but what is more specific about DeFi, because it wasn't only Commissioner Pierce, was even Commissioner Lee. I don't know if the listeners here are, she delivered a great speech, I think it was October 2020, where she emphasized that regulators just cannot regulate in the dark, meaning that it's very important for the regulators to distinguish from the people. I mean, especially when we talk about decentralized finance. So who are the players, who are the authors that they're going to go after? Authors, I'm talking about projects. And adding a little bit, or maybe this would be a good segue into the AML compliance and KYC compliance, because this is going to be also very a big path for this administration as well. For the listeners, there was already a proposed rule, a FinCEN rule for the requirements for certain transactions involving convertible virtual currency and digital currencies. This was back in, if I'm not mistaken, in December. And of course, it caused like great discussion among, especially about the players in cryptocurrency, because under this proposed rules, the users who want to send cryptocurrencies from centralized exchanges to private wallet, they would need to provide, first of all, personal information about the owner of that specific wallet to the exchange. And I don't know if I should go into the amounts. It has to be more than 10,000 a day, etc. My point is that this is going to be important, because also translates on other requests that we have seen from the Financial Action Task Force last year. And now going back to the AML and KYC compliance, but for myself, I think that the IP issues are going to be more specific if we want to switch to the NFT discussion right now. As an IP attorney, I do see a lot of issues with the special copyright law, the transfer of copyright, who is the creator of that NFT, what are the rights that are going to be transferred with the first sale of the NFT. And I think that our industry right now probably is seeing a little bit of a hype about NFTs, and I'm not trying to make people aware or scare them away from NFTs, but I definitely see that the potential is there, but at the same time, NFTs are going to be quite dangerous when it comes to the protection of IP rights for the owners.
Drew, you want to chime in? Your mic working now?
Sorry about the technical difficulties there. A couple comments I'll just jump around through. I find DeFi fascinating, and initially I was a skeptic, but I've come around to understanding that it really is the spiritual inheritor of Bitcoin. It's a new way of doing things without the typical intermediaries standing in the middle, censoring your transaction and charging you for the benefit of using them to transact. And it's going to bring new challenges. Rebecca did a wonderful job of explaining how decentralization is a word that you shouldn't, it shouldn't throw off red flags, but that you should be thoughtful about when someone says something is decentralized, what does that really mean? Does it mean that you have 5 computers doing the job that one could? Does it mean that there are hundreds of people that are making decisions that might impact the value of your investment or the use of funds aggregated by a group? Decentralization is not a monolithic state, and it's not a goal, it's a tool that can be used to allow people to organize themselves to act collectively in a new way. And if you think about DeFi in that context, it's really, really interesting. I would think, and this is my own personal view, that you're going to see DeFi start to integrate with traditional finance in ways that are going to be fascinating and that are going to open up these new sources of liquidity. I can say personally, I've got clients that are working on bridging the divide between DeFi platforms and traditional financial activity in ways that are fascinating. And so I think I'm bullish on the area as I learn more about it. And I think that there's going to be a lot of work to be done. The regulators are obviously looking at this as they see the numbers going up. I know that the CFTC has brought both academics and practitioners in to talk to them about approaches. On December 14th, a academic and a commodities law practitioner went before the CFTC and gave a presentation. If you want to dig it up, it's a fabulous overview. And they advocated for a don't put your hands on this quite yet, let's see what it grows into kind of approach, which is a smart thing to do. We know that if things go haywire, the regulators will come in and flex their muscles. But in the interim, it appears that the CFTC is, at least in the short term, not taking the Bigfoot approach that the SEC did. And that makes me even more optimistic and excited about where DeFi could go.
That's fantastic. And also, we should point out that it's global. I mean, I'm pretty sure that the CEO, co-founder of Aave is based in Europe. Stani, isn't he in Europe? Yeah. So I think that this is a global phenomenon. And I wanted to, do you have anything?
Can I say one quick thing? Yeah, I mean, it's not just global based on where people are based, but yeah, Aave is not a US company, but it's global because you really can access it from anywhere. You can access it from your computer in some ways, depending, you can access it from your phone. And while I don't know if I think that means, financial inclusion off the bat, it means that it gives people a lot more access than they already had. So I think, the global nature of it is because you can really access it from anywhere.
And just a word on the global nature very quickly. Global assets are kind of new and interesting because the only global assets that we've generally thought about are commodities. A troy ounce of gold is the same thing no matter where you are. And so to a certain extent, these assets do act that way, even if under certain countries' laws, they might fall under a different specification. Right now, we've got assets that don't have a legal status in the United States that are payment instruments in one jurisdiction. It might be securities in another jurisdiction. It might be illegal to own in yet another jurisdiction. So what does this mean? It means that there will continue to be some confusion in the market. It means that there will be fabulous opportunities for arbitrage as you try to figure out how the different regulatory approaches might allow you to do certain things with these products. And it means that intermediaries that service the industry, like professional service providers, accountants and lawyers and folks that develop financial products, are going to have a significant role in the development of the assets that come to market. So support your local lawyer, I guess, is the pitch there.
Alta, you want to continue on something?
I mean, I 100% agree with Drew, but I think that right now probably it's going to be even more beneficial for our industry to see a little bit more joint research efforts on the issues that we're discussing. And what do I mean by that? I mean, it would be nice, and going back to the new administration, to even consider a little bit more collaboration with other international regulatory bodies. There is a lot of value to this technology, but the more involved and the more collaboration we see, I'm not trying to say that, hey, let's mimic what Canada did or Switzerland is doing. My point is that the more you see this collaboration, we sort of learn from each other and maybe just go through that adoption process maybe a little bit easier.
Yeah, and talking about global regulators, I think the one thing, and bring it up here so that it just is aired out at least. The one thing all of the regulators were anxious about, and we've seen some perhaps ill-advised legislation proposed across the globe, was Facebook's Libra, now called Diem. And so I think that though many of us think stablecoins are an integral part of the crypto landscape, most of the regulation which limits the use of or potential use of stablecoin is really, it's got the word Facebook all over it. Does anyone want to follow up on that? Or on, we mentioned CBDC, central bank digital currency. Anyone want to chat about those?
Yeah, I'll throw my hand up very quickly. Central CBDCs are fascinating. We heard the prior speaker talk about how they can be potentially a tremendous boon for liquidity or a significant threat to privacy and a means of controlling people. And it really comes down to architectural choices as well as the politics of the day. We're going to see a lot of countries experiment with a number of different platforms. Some will be used for good, some will be used for bad. Like all technology, it's a tool. But in this case, it's a tool being wielded by the same entity that has the power of violence and control over the law. So I am bullish that almost every country is going to experiment with some form of central bank digital currency. Some are going to use it to better their people. Hopefully that's the United States. And some are going to use it to control their people, which is maybe not the best outcome. The key thing to think about is the role of incumbents. The early literature on central bank digital currencies looked back at the Chicago plan from the 1930s, which was a post-depression idea of centralizing the banks around the Fed, giving all US persons an account at the Fed and having them interact directly where the government would be able to control economic policy on a more centralized basis. I don't think the banks that right now are creating tons of shareholder value, employing hundreds of thousands of people, own tremendous amounts of commercial real estate, are just going to sort of let that happen. So you're going to see a lot of different technology stacks, a lot of different architectures, and a lot of different governance structures in these CBDCs. And it's going to be a fascinating time to watch these things develop. I do think that they will take a lot of the air out of other stablecoins. However, stablecoins that work cross-border will be distinguished from CBDCs if they're allowed to be used in that jurisdiction.
Rebecca, you have any follow-on to that?
All right. No, I mean, I will say that for the past year, I've been talking to various companies and others who have been really thinking about and working on CBDCs, and traditional financial companies who are thinking about how CBDCs may disrupt their business. And so I think, this was sort of mentioned, there are a number of projects in the United States talking about bringing US-backed CBDC forward. And so I think it's going to happen, may happen, as Drew said, slower in some jurisdictions than others. But I think having a touchless monetary society is coming our way, and it needs to be embraced. To your point earlier, Donna, because it's so new, there are risks, and everyone should make sure that they are aware of what the risks are. And the risks are really different than in the legacy financial world, right? Oracle risk is not something that everybody thinks about when they're transacting with JP Morgan or something like that. And learning how to read and review security audits on these types of protocols is really important. And so people should get themselves educated on what the types of risks are, and then really start experimenting is the wrong word because it sounds too dangerous is not what I'm thinking, but should really start wading in and thinking about how to become part of this system in some way or the other.
Yeah, and we even see as we mentioned earlier on, or Drew did, Grayscale. Grayscale is considering having one of its funds or its trusts be composed of DeFi tokens. So I think that we are in a very, as kind of circling back to where we started. I mean, we are in a very different landscape than we were a year ago. Not only in the products that are being potentially offered and can be used by all kinds of businesses and different types of investors, but also from the kinds of regulatory oversight that may or may not be required as we go forward. And how do we also think about this as in a global context, and not necessarily only US in one place and EU in another, though they have very different definitions in many of the proposed regulations from, let's just say, the EU and the US. So is there any questions, or do we do Q&A? And anybody have a question, hands up, or let me check the Q&A thing. No, I think we're good. So the other, is there more time to chat? If there's more time to chat, I would look specifically at what's been spoken about now for quite some time, well, quite some time, for a little bit of time, is the marriage between potentially NFTs and DeFi. And that brings so many things. It brings the IP that Alta was talking about. It brings the risk of how do you price something, and what's the transparency. Does anyone want to speak to the potentials there of what might be that look like? Drew, you always have some good ideas.
NFTs are fascinating, if only for the flexibility of the platform. The idea is that you can make a identifiable, non-fungible digital asset. You can point to something and say, I have the first, or I have one of the limited number of these things. And they're right now being used to associate ownership, air quotes, ownership, with some sort of audio-visual experience. One platform that's doing very well is called NBA Top Shot. It allows you to buy and control an asset on a blockchain that points you to an image and a video of an NBA player doing something significant in a basketball game. It's growing in popularity, and it's a nice example of something that's a little bit accessible to a bunch of different markets, investors, memorabilia collectors, and so on. But the power of NFTs goes beyond the ability to associate a digital asset with art. And it implicates a ton of really interesting questions, most of which here are for Alta, the IP lawyer, to talk about what are you actually getting when you get the NFT. Usually the structure is you own the NFT, and the NFT acts as a pointer to some licensed audiovisual content. And that creates all kinds of really interesting legal issues as to what do you really own and what rights do you have as to what you own. But I like to think about NFTs broader. It's not just the ability to own a digital asset, but it's the ability to have provably distinct ownership of a thing. Think about NFTs being used as ways of tracking commercial paper or other sorts of financial instruments that may be right now represented by paper. This opens up the potential to create new liquidity and to have significant efficiency gains in what are otherwise manual and kind of slow transactions. So for now, the art side of this is incredibly cool, has its own legal issues. I'm thinking further down the line that this is a new tool that can be used to change the way that we do a lot of very high value business.
Alta, you want to jump in for a few seconds? And also, I think that one of the things that before you speak is, people need to look at each individual platform because it's not out there. And it's very, very, very popular. It sold about 200 million of moment in just the beginning weeks. So, everybody should do their due diligence on each asset platform, and Alta, you follow through on that.
And I think something else that I would like to add here in regards to the IP rights, because I mentioned copyright, but I would like to emphasize even trademark rights, because especially for the big companies that have been in the space for a while, and they do have larger IP portfolios, trademarks are usually traditionally thought as being more related to consumer protection. So when we're dealing with NFTs, then the question is how they're going to be incorporated in those trademarks and those slogans on or those brands that these big companies already have created. And at the end of the day, when it comes to trademark infringement, who is going to be liable for what? So I think that even the enforcement, when it comes to enforcement, and I mean, in the IP perspective, definitely we're going to see a lot of more issues about copycats, as we call them in our IP language. And I have, just going back, if we have 2 or 3 oh, I think maybe our time is over, but just to emphasize a little bit about the CBDCs that I would like to mention, also the privacy issues that are related to CBDCs. And I think for the listeners, that's another great point to be careful about and consider what privacy issues CBDCs bring with.
Yeah, and I would just on ending say a really interesting clip for people in the audience to watch was there was a very good 7-minute video done called Currency Wars at Harvard. It was about a year and a half ago, in which Gary Gensler, hopefully the new SEC chairman, participated, Larry Summers and others. And the key was that economic wars were no longer as important as currency wars. And when you had the defense secretary and all of them, they were pretend secretaries, but they were role playing, worrying about the currency wars, it gave you an idea of what might be in the near future. And we thank you all for a fantastic panel. We could go, as we all know, because we do it all the time, go on and on and on specifics relating to regulation. Thank you, Denny, so much for having us. And we're available, online or offline for questions.
Thank you, everybody. Thank you so much for being with us today. And Donna, looking forward to seeing you later on. And soon today, your NFTs panel will be.
Yeah, I'm not really participating in that, but I'll definitely watch it.
Thank you. But you helped, of course, build it all. So thank you for all the help. Now comes the part. You see, all this COVID got me to go back to my time as a journalist before, many years ago. And now that we're doing everything online, I came back to that. So I'm very happy to have Brock Pierce with us today. How are you? Where are you?
I'm grateful. I'm in New York, about to jump on a plane, and I'll be in Miami this afternoon.
Oh, wow. Nice. If I only knew you in New York, I'm in Rye. So I met, you wouldn't remember, we met briefly. I was sitting at sort of like a steering committee thing at the Chicago, forgot the name of the conference, big event, blockchain. And I think you came to our Florida event, the family office one we do right before Art Basel. And I'm very happy to have you here. I mean, you are one of the most interesting stories, a great career. You are doing amazing stuff there. And I think, before I'll read a little bit of your bio, which is, if I'll have to read it all, it's going to be the entire, session. I would love to ask you this, because some people adore you. Some people don't understand you. And if you're asking me, probably a lot of people envy you, which is why some people don't understand you. And I think, some people said, oh, EOS, they had a good luck because they were right at the right time and people invested so much money. I think, looking at your history, you cannot be lucky time after time, because as a serial entrepreneur, you've built things from scratch in different worlds time and time again, which is unbelievable. So how do you think people perceive you? I mean, some people don't understand you. They don't understand how you work that way. You jump from place to another. You are completely breaking the rules. How do you see that?
Yeah, I'm very unique, and there are not a lot of comparable individuals that have continually reinvented themselves over and over again. And so if you're trying to put someone in a box that I don't really fit into any of those boxes. And so I'm hard to characterize. And so what that does is, for those people that typically know me, they understand at least my nature, right? That I'm all about doing the right thing, operating with integrity, building things that have never been done before, and generally insightful. And have a lot of views on where the world is going. And then because I chose to live an unconventional life, I dressed up in Burning Man clothes and events. It's like all of a sudden I really don't fit into a box because I'm an artist at heart. And my more recent run for president last election cycle has now added this entirely interesting political persona, and so I wear many hats. And so, and then I also, up until just recently, I've chosen to do everything I possibly can to stay out of the media, which means I've never had a PR person until the last year in my entire life. I never, ever approached the media, tried to be in the media. And it means the only time I was in the media is when somebody else was telling my story. And at some point, you know, you have to tell your own story. You have to try and have more control over the narrative, which then makes things even more complicated because others are telling your story for you with, you know, limited information and sometimes presenting you incorrectly.
I absolutely agree. And by the way, you're not in the media. We are, a community of family offices doing conferences, and I would love to have you on stage as soon as we get back to business. I will send you something about what we do in the UAE, where Anthony Dioyo, that reintroduced us, will be speaking. But you know what? Before we jump to your game, to your story, COVID. I mean, how is it where you are in Puerto Rico? But more than that, you're traveling. Right, I'm avoiding my trip to Dubai because of COVID, because I didn't get vaccinated. I'm not in the right age group yet. How is it with you that you're traveling all around the place now? How is it in Puerto Rico? What's going on?
Well, I travel a lot less in this last year than I used to. For probably 20 years, I was rarely on the ground for more than 3 days in any one place, all over the world. I was in Europe normally every month, Asia every month. I mean, I'm just going round and round and round. I was flying, 300,000 or 400,000 miles a year. And so COVID has been a blessing in that regard. I feel grounded for the first time in my life. So there's always a silver lining in everything. And so I was basically in quarantine for the first few months. And then as I began ramping up my run for president, then I started moving around again. The campaign was originally running out of Los Angeles. The mayor of Los Angeles outlawed democracy and said that campaigning and running a campaign or running for office is not an essential business. And so I had to move my campaign to New York City, where democracy was still permitted. And then we ran the campaign out of New York City. And then I basically did I campaigned around the country. We held a major event in Wyoming. I spent time in Alaska, South Dakota, North Dakota, Utah, Idaho. I did a fair amount of traveling during COVID, more than most did, but that was part of the political aspect of it. Post-campaign, I've been grounded a lot in Puerto Rico, but I'm very concerned about what's happening politically in New York City. I moved to Puerto Rico to live in, to get some experience in the part of the United States that was struggling or hurting the most. And I moved immediately after Hurricane Maria in the midst of the devastation, the longest blackout in US history. And so I'm very concerned about what's happening in New York. It's the part of the United States that matters the most. It's not the legal capital or legislative capital, but it is the capital of the United States financially, culturally, and you could argue the capital of the world still to some extent. So what happens to New York City is not only going to affect the tri-state area, it's going to affect the whole country and the world to some extent. And so I'm deeply, deeply concerned. And so I'm in New York about 1 out of every 3 weeks right now, because this is their election year. And the midterm, the primaries are in June. And because it's such a democratic city, meaning that the new government will, for the most likely, will be decided by June. And so I'm behind the scenes very actively involved in New York City politics. A number of religious leaders and hugely powerful and influential people, hundreds of them asked me to run for mayor of New York. I regrettably had to tell them that I don't think it's the right fit for me, but I will continue to show up and serve in every way I possibly can, recognizing how important it is. By running for president, I put a stake in the ground that said, I've committed my life to public service. And once you've put yourself out there as someone available for those jobs, people start to call you. And so it's been a wonderful journey these last few months, making the rounds in New York City politics. And I'm going to continue to be there to support whichever administration and government wins this round of elections, because it matters a great deal.
Did you get vaccinated, by the way? Did you get a chance or not yet?
No, I've not been vaccinated yet. Though I've been tested. I mean, I can't even count how many times. On the campaign, I would get tested every couple days, as with the whole team. I get tested normally twice a week, unless I'm on the ground in Puerto Rico not moving. And I ended up in environments where I was extremely exposed to COVID, where everyone in the room got sick, but me, and never had the antibodies. My doctors believe that I've probably developed an immunity, because if you've had enough exposure, what happens is you can build up the immunity without ever actually having caught the virus. And that's what their theory is, because I've been in situations where I had to go into quarantine because I was so present with people that were infected that I had to assume that I was. And that's the assumption, is that I probably can't get it.
I have loads of questions for you, but just another one. I travel a lot, but not like you. I mean, we have our conferences around the world, but nothing like you. How your family deals with that? Isn't that hard on your wife? You have a daughter, I believe.
Yeah, I have a 12-year-old daughter and a 2-year-old, soon-to-be 2-year-old daughter.
Okay.
Yeah, it's obviously when you've committed your life to service. I did that through innovation and technology and entrepreneurship, and investing. Now I've added the public service sort of element to that. It comes at an expense. It comes at a great cost to my family. I am not as present as I would be otherwise. And so it's very difficult for them. It's very difficult for me. But I feel that we are living during a period of time where, as a humanity, as a planet, we are facing very real existential threats on multiple levels. And if good people don't step up and heed the call, we could be in for impending doom. And I think we are doomed if we don't do something different. And I've chosen to do everything I possibly can to make a difference.
And you went from to do that, you went from a world that up till now has been your ecosystem of entrepreneurs, exciting people, energetic people, only want to create something, to a world of politicians and who knows what else, and all these schemes and games and politics, which is completely the other extreme. No, and you're willing to do that because you said enough is enough. I want to do something. I want to influence things. Yeah.
So I mean, it came from. I just have to be careful how much I disclose, but it came from as you learn, as you know more things, you start to see problems. And so one of the companies that I had the pleasure of starting or co-founding was called Tether. We invented a thing called the stable coin. What I wanted to see is if we could take the dollar and put it onto the same technology that made Bitcoin possible, give it the same attributes, but with US dollars, or put it on the blockchain. We did that, started that in 2014. That digital dollar is now doing over $100 billion a day in transactional volume, over $40 trillion a year in annual transactional volume. And then I saw governments around the world recognize that technology could be used by their central banks to enhance their currencies. I then saw China implement it and create the Chinese digital yuan, or begin the process of that. And I understand probably better than anyone what that means and the potential impact that could have on the US dollar's reserve status in the world and how it will impact international trade. Citibank on Monday started talking about how this Tether digital dollar is being used for trade settlement because you can settle transactions 7 days a week, 24 hours a day. It might be as high as 10 or 20 billion a day right now, and those numbers could go fast. And so I went to go talk to, let's call it the national security type apparatus of the United States a few years ago, to say, hey, what's going on? And they're like, huh? I go, well, you know what's going on over here? And they're like, huh? I go, well, do you know what I did? They're like, huh? I go, do you know how this stuff works? They're like, huh? I said, oh, God, help us. I walked around Washington, D.C. all night going, well, I guess if not us, who? We're going to have to get involved, because it's imperative that our elected officials and our, call it, civil servants understand this stuff, because in the geopolitical landscape of the world, this can make or break nations. And so there's a lot of things that led to my getting involved, but I believe I'm uniquely qualified to make an impact in a very positive way. And so I spent a lot of time working with state legislators. I spent a lot of time with federal legislators, staffers, and otherwise, to make sure that the House Financial Services Committee understands this stuff, so they don't inadvertently pass bad regulation that could cause America to no longer be the capital of innovation.
And because we don't have too much time, and I would love to do an entire session with you later on down the road, which is like an hour where we can really dive into details. I will jump from one thing to another. You started in showbiz, and there's no business like showbiz. I mean, that's where magic happens. I remember I read somewhere you were talking to somebody and you were putting John Williams's Star Wars theme, and you grew up on that magic and you were part of that magic, right? You don't miss that? I mean, that's a very unique world, and you were there as a kid, child actor. What about that?
Yeah, so I was made in Minnesota, and at the age of 3, I started acting, making commercials for Kellogg's, Sears, Target, General Mills, these types of things, because those were all Minnesota companies that hired locally. And like a lot of kids from Minnesota, I grew up playing hockey. And so when Disney came to town to make the first Mighty Ducks, I booked a role playing young Emilio Estevez or Gordon Bombay, opening up the movie at the age of 10. And then Disney brought me out to California to shoot Mighty Ducks 2. And then I moved to California, eventually starring in movies like First Kid, where I played the son of the President of the United States of America with Sinbad as my Secret Service agent. But now as a child star, I started to ask myself the questions that, most people don't do until much later in life, which is this my calling? Is this my purpose? Is this what I want to do in life? And upon doing that, I said, well, not really. I want to be a creator. And so I went to my, management agent and things. And I said, I'm going to quit acting at 16 at the height of my career. And they're like, what? I said, yeah, I don't think this is, what I want to do with my life. I didn't choose to be an actor. I just was. And they're like, people would do anything to be in your situation. You can't be serious. I said, no, I am. They're like, well, what are you going to do? I said, well, I think the technology is going to change the world. I'm going to become an internet entrepreneur. And this is in 1997. And so I went off at 16 to start my first business. And that moment, that transition was a very important one, because a lot of times in life, people end up stuck in whatever it is that they're doing out of convenience. It's golden handcuffs. You've got something working for you. So it's very hard to walk away from that thing that is working to venture into the unknown and potentially fail. But I did that courageously at 16, which then led to me doing it again and again. And once you become comfortable with that type of risk, walking away from whatever is working for you and whatever you're succeeding at, then you get good at it, which is how I've been able to reinvent myself so many times and walk away from something that is working well and has the potential to make me an extraordinary amount of money, and instead say, I'll take a lot less because I want to go do the next thing. Most people don't do that. It's very hard, and I've done it dozens of times.
And by the way, just one more word about this world. I mean, you took your career to crazy places. I wouldn't say most, because I didn't study it, but let's say many child actors end up in ruins, right? I mean, in drugs, in suicides, in horrible things that happen for whatever reason. How do you see that? Why is that? Do you think it's a very destructive world and kids cannot handle it, or do you think it actually helped you?
Yeah. So I get asked by people all the time, with their kids. They're like, hey, my kids are thinking about acting. What do you think? Good idea, bad idea? I said, it's a great idea if it's their choice. There's a couple of things they're going to learn. One is they're going to get very good at interviewing. As an actor, every audition is a job interview. And when you do multiple job interviews a week, that's a skill set that is going to serve you very well in life, whatever you choose to do. Another thing is they're going to get really good at dealing with rejection, because you almost always get rejected, which is another wonderful thing to learn in life. To be comfortable with people saying no and rejecting you, and learning how to present yourself in a job interview. It's great. Now, if they're successful, which the odds are very low, come back to me, because that'll present a whole host of challenges. But don't worry about it. It's probably not going to happen. And so that's what I say to people. Now, why it ends poorly for a lot of the successful actors is these are young people, right? That are still in their development years. And especially for those of us that become stars, you become the center of attention. Everyone wants to know you. You're invited to everything. And invariably, you can't stay on top very long. What goes up must come down. And as a young person, where you're raised up onto a very high pedestal and then brought back down to a more normal level, that is a very difficult thing. And often your education took a huge hit because you were busy working and you didn't, have your, what are you going to do next in life? Because you normally can't bank on that forever. And so you went from being a movie star to having to be a waiter in a restaurant, and you went from having your ego raised up to humbled. And that can bring about depression, escape, drugs and things of that nature. In my case, because I quit at the height of my career, I walked away. I never experienced that. And then I also reinvented myself, at least successfully. Right. So I never went through that. But that's generally the psychological trauma that these young people, because they're not old enough to deal with it. Right. They're young and they don't really fully appreciate or understand everything that's happening. And it can be quite the roller coaster ride.
And speaking of skill sets, I read that you were sophisticated enough to go to those interviews, to those right, and you did magician stuff that you were also doing. So, and you said somewhere, listen, I wasn't a better actor than the other guy who was right here, but they remembered me, which is brilliant.
Well, yeah, that's exactly what I did. So what I figured out, I was a child, but I figured it out. These casting directors and producers and directors, whatever, kids come in, they say their name, hi, I'm Brock. They read their lines and they leave. And they have 50 kids coming in doing the same thing all day long. What I learned is to come in and say hi, shake the hand, and instantly do a magic trick. And they're like, what? And all of a sudden they start talking, and then I do another trick. And then next thing you know, we're talking for 5, 10, 15 minutes. And then they're like, oh, wait, we got other people in line. Let's get through your stuff. And then, I read my lines, and then they're like, oh, wow, this was wonderful. You made our day not so boring. And so at the end of the day, I wasn't the better actor. I was just the only one they could remember. And so what I learned is how to stand out, how to stand out in a crowd, how to differentiate myself, which is a lot of what we've learned in life for those of us that are successful. Our systems of indoctrination or education rather teach us all to conform, right? To all be the same. And then those of us that normally go on to do extraordinary things eventually learn to be extraordinary. You have to be different. And you have to eventually break out of that model of conformity and to pave your own path. And I figured out how to do that at a young age.
We have loads of questions coming from the folks here. I will address at least one of them in a second. I don't know where to start. We have so many interesting topics to talk with you about. But when you're, I read somewhere that you were thinking or talking about basically doing philanthropy so much philanthropy that you're going to give away basically most of what you've done. Is that so? How do you see that? And you know what? Maybe I'll also ask, what's your perspective about money? I mean, you're dealing with tremendous amounts of money. People are looking at you. Wow, look what the guy did over and over again in every place you've been. And now here you are. You don't have. You dress casual. You're willing to give so much money away. So maybe I asked a question here. I don't know. Maybe
No, of course. So I've dedicated my life to living in service to my last breath. I don't consider my money to be my own. I am just a steward or custodian of it. I can't take it with me. And I believe money is kind of like energy or water. It just wishes to flow. And so my job as a steward of these things is to make use of it and to allocate it and put it in places that are going to make an impact in the world. And so philanthropy is one of those areas, because not everything, not all problems can be solved with business models and sustainably. I believe a lot more can than we currently do. And so I've been trying to give away a lot of money, and it turns out it's a lot harder than I thought. But I support now probably about 200 different philanthropic organizations, and every day it's a substantial amount of my time. At least 10% of my time every day should be devoted to philanthropic work, if not more. And it's not just money, but time. And I don't just give money away. I actually roll up my sleeves to build things and solve problems. In the same way that I try to solve problems with my business skills, I try to apply those same lessons. Like we talk about in business, return on investment. In philanthropy, I look at it as a return on impact. I don't want to give $1 to a charity where pennies on the dollar or dimes go to the underlying cause. I don't even want to give $1 to a charity where only $1 goes to impact. I want to see a return. I want to know that my dollar is creating multiples of impact because I've intelligently deployed it. I want, in the same way that in business, we are measuring and accounting for everything. And I think that a lot of those lessons that I've learned in capitalism can be well applied in philanthropy. I think of myself as a conscious capitalist.
Amazing. And I know, I actually read in one of the articles that somebody did with you, that spent a lot of time with you, that you actually do that. I mean, and very, very fast. He was sitting with you. This guy comes in and says, in Puerto Rico, listen, there's this area that was really bad hit. They're doing very poorly. And you just came to your guy and you said, can you be there? Can you go there now and check it out? Like now, the guy the next day actually went to that place, and you guys already started to make things happen. So you actually get things, happening in very fast without even thinking, which is amazing. Now maybe just before I go to another question, couple of questions here. What do you invest in, by the way? Obviously, the world of blockchain, but when you look at what's interesting to you, technology, real estate, where are you?
Yeah, so I do a lot of things. I do a lot of real estate these days, but not like investing. I don't buy property to flip it. I don't buy property to sit on it. I normally buy historic properties to preserve them, or I buy like derelict, properties to fix them. I do the hard stuff, and I also don't go into the neighborhoods that everybody else is doing, because then what do you need me for? I go into the places where no one else is willing, because that's where I can make the biggest impact. And it's also, people don't go there because the amount of work that you have to do to ultimately make those investments viable is more work than most people are willing to do, and the risk is higher than most people are willing to take. And the path to liquidity is normally long, but that's where I choose to, make my investments, and it requires a great deal of work and a lot of risk. I'm also starting to make a lot of investments into agriculture. I'm really interested in food security. I'm making investments into renewable energies, carbon capture technologies, looking at. I'm all over the place, but. I view my investment mandate as I'll invest in anything in Puerto Rico that involves Puerto Ricans that is going to be helpful. Like people come to me all the time. They're like, "Hey, Brock, will you invest in my coconut water business?" I've figured out and have the first zero waste certified company in the country. This is called Coco Taps. It's Coco Binny. You may have seen him on Shark Tank or The Profit. I've known him for years. He's like, "Brock, I want you as my partner." I said, "I'm sorry, you don't fit into my investment mandate." And he's like, "Oh, but I go, actually, if you move the business to Puerto Rico and help build a coconut agricultural industry and start to create coconut water in Puerto Rico and start to partner with Puerto Ricans, then we could talk about an investment. I might even be willing to lead that." He's like, "I'm on a plane. Let's do it." So there are, my mandate is I'm focused principally on Puerto Rico and things that I can do that'll make a positive impact there. And then I'm generally interested in technologies that are going to have a positive impact in the world, and that's broadly all future tech. And then I'm interested in some rural revitalization projects. I just made an investment into a small town in Virginia, and we're looking at all the things that would be necessary to help revitalize these secondary or tertiary, cities in the country. And so, I'm kind of interested in everything. It's just as much as I can do with the time that I have.
Thank you. Now I'll just go to one of the questions here for you. Do you have an assessment expectation where Bitcoin and other privately issued crypto is coming under pressure from foreign governments who are in the process of launching their own CBDCs like India? And then a second part is asking, we asked it before, I think we asked this question already, but somebody else, but he wants to ask you as well. Appears the US Fed is helping to orchestrate new narrative that Bitcoin is at odds with ECG, uses too much energy, all of that, among other arguments. Bad people use it to fund bad things. Since the US Fed employs about 88,000 very well-educated and well-paid British regulars, whose sole purpose is to manage the value and prospects of USD as a reserve currency, and they've de facto an unlimited budget to do this. How do you see this ending?
Well, I think it's already ended. This week alone, Goldman Sachs announced their crypto trading desk, that they do this proprietarily. Citibank announced how it's being used, and they said that Bitcoin may hit $300,000 by December of this year. In the last couple of weeks, you had Tesla buy $1.5 billion worth of Bitcoin. Square, MasterCard announced integration across the board. JP Morgan's now changed their tune. BNY Mellon, the oldest bank in America, the largest custodial bank in the world, announced that they're going to be adding crypto custody services. Fidelity, Pfizer, the list goes on and on and on and on. These very smart financial institutions, their brands are very valuable. Their brands are all about trust. And if that trust is eroded, their ability to basically be trusted intermediaries goes away. They do not attach their brands to Bitcoin lightly. The fact that all of these institutions have done that, I think says it's not going anywhere. I think that Janet Yellen's response, and this is not a criticism of her, she's very smart, but when it comes to technologies like this, I do not think she's very informed. I think that she made statements that were inaccurate and provably so when it comes to nefarious use cases. The US dollar is pretty much what is used for criminal activity. And it's provably wrong. I think that she made a misstatement that was not informed and was not, and again, new in the job. That's not to say that there are not people in the Federal Reserve that know this. I was speaking to and teaching all the presidents of the Federal Reserve about Bitcoin in 2014. I've been behind the scenes as one of the main advocators and educators for governments around the world, going back quite some time now. What do I think is going to happen there? I think that the U.S. And by the way, to Janet Yellen's credit, it's worth pointing out that she said the technology behind Bitcoin is very real and probably will play a very important role in our future. So it wasn't all negative. Remember, the media likes to sensationalize and parse out, a couple of your words to, tell a story. And so I think that Janet Yellen's words, she made a misstatement and it was blown out of proportion. And I'm also good friends with Nouriel Roubini. I'm next door neighbors with Peter Schiff. He manages some of my gold equity portfolios. And so I know all the biggest critics. And I like to surround myself with people that disagree with me. That's how you stay sharp. That's how you stay smart. I don't want to be in a room of all people that share my views. I want to have, good old classic civil discourse, and let's argue and discuss. And at the end of the argument, we can agree to disagree, but we can do it respectfully. And I think that's one of the things that seems to be lost right now societally, is that ability to engage in, real intellectual conversation and to do it with respect. And we can disagree, but at least through that process, I better understand your position, your perspective, and where you're coming from.
So you think that Rubini doesn't get it when he thinks that Bitcoin is worthless?
Yes, because I think that he's utilizing an old model. He's utilizing, looking in the past and basically back testing information and looking at how the economy has worked historically, which he is one of the smartest economists in the world. But I think what he's failing to understand is where the world is going. And I think that he also kind of has taken a position, and when you've taken a very public position, you feel the need to defend your position. And the fact that Goldman Sachs, JP Morgan, BNY Mellon, MasterCard, and all of these groups are all disagreeing with him now, I imagine he's probably getting close to, he's going to start to create an opening and be like, yes, it doesn't fit with any of the old world rules, but maybe there are some new world events occurring, and that could cause something new to emerge that defies all of the historical logical rules. And I believe that's what's happening here. And Noriel and I have had endless conversations, not endless, but many conversations publicly, privately, dinners at his house regularly.
Now there's another question here. When you were on the cover of Wired magazine and had your face on the front of your own money, did you ever think you would end up at this point where you use money to help impact billions of people?
Yes. And that Wired issue, what's really entertaining is you should look at the date. It's the December 2008 issue, 1 month before the launch of Bitcoin. I built up a supply team of about 400,000 people that were mining digital currencies for me all over the world. We were PayPal's, sorry, this phone is not adequately charged, and so it keeps shutting my camera off. We were mining currencies all over the world, principally in China. We were PayPal's largest merchant for years. We were Google's largest advertiser for a moment. We launched Alipay. We did plus $10 billion of this cross-border financial transactions and all this sort of stuff. And we were testing economic theories in effectively what were virtual countries. I was the main market maker for, call it 3,000 different virtual currencies for these virtual worlds. My main investor was Goldman Sachs Principal Strategies, which was the proprietary trading division of Goldman. When I was their first private investment, when they saw what I was doing in 2005, they're like, you're kind of managing something more complex than the global financial system in some ways. We have to fund you. We need to be paying attention to this. Something says something's going to come out of whatever you do. That's why I got into Bitcoin and these things is we learned a lot in what we could do in virtual worlds. I wanted to see what we could do in the default or analog world where the two meet. And it appears we can do a lot. Here's a crazy number for you. Almost half of all the world's billionaires now came out of crypto.
Crazy.
Meaning that, like, when you start thinking about now the impact this can have on the world, it's not just crypto and like, okay, the impact it can have on monetary systems and policy and what it can do for this, and that. Half of the world's billionaires, almost half now, made all their money in crypto. And those numbers are probably going to continue to go up. Meaning you have like a bunch of new kids on the block that made their money quickly and easily, which means they're also willing to use it to do a lot of good. You've basically empowered a group of people that exist all over the world. They're not limited to one geographic area, and they are of this new generation that easy come, willing to give. Like this is the sort of thing that could change the world. Or save it, depending upon how concerned you are.
Yeah, but I guess not everybody are like you. I mean, I spoke to Anthony Diorio. I think he shares your point of view, and now he really wants to dedicate his life to make this world a better place. And I hope more people are like you, of those billionaires. I don't know how many of them share your extreme mindset. Maybe even not in your position, even if they would just think a little bit like you, of course, it would be amazing to the world.
Well, that's what happens is, remember, you come into Bitcoin with greed, right? You see speculative opportunity to make money. And then once you've come into this space over time, because the rabbit hole runs deep, you start to get the philosophy or the religion. And not everybody has that right away. And this is what I do, is I help to educate this community and lead by example. And what I can tell you is Anthony and I are not alone. There are many of us and more of us every day.
Brock, it's been amazing. You're one of the most interesting people I've met, and I met a lot of interesting people in my business, doing conferences all around the world to family offices, from movie directors to investors. It's been brilliant. People are writing me on the side if I'll be able to get you to do one of our weekly sessions where we take an entire hour and discuss. That's what I'm going to work on now, convincing you to do that with us. Thank you so much for being here, in between all your trips and everything. I really appreciate it. I'm looking forward to seeing you in person again. And there are many more questions waiting for you here, but guys.
Well, so the answer is yes, I'm always happy to come back and educate and inform. Last comment before I leave, because I have to go to Miami. I've got a breakfast meeting in the morning with the mayor of Miami. And this is just another crazy.
Suarez?
Yeah, correct. And what's interesting about the mayor of Miami is they passed a resolution where if you work for the municipality of Miami, you can now receive up to 100% of your salary in Bitcoin. The municipality is buying Bitcoin on their balance sheet. So when we talk about where things are going, like the governments, and by the way, Miami is not alone. They're just now the most vocal. You've got 80 governments in the world that are piloting this stuff. And so when I said the game is over, we're past that point. Now it's just a matter of what kind of world do we create? Thank you so much for having me. I appreciate you. I would happily come back for one of your weekly sessions, and when we can get back together in person, one of your live events.
Thank you. And I will say that Mr. Suarez, I'm very fortunate. Every one of our conferences in Miami, since we started, or since he's in his position, he is the keynote that opens the conference every single year in Miami. And indeed, I just reached out to them 2 weeks ago, telling him, you got to speak at our blockchain event because you're doing, I think, by the way, and I'm sorry, we'll open the panel in just 1 minute. I think what's amazing is that he's very, I spoke, Michael Blumberg just moved to Miami, and I told him, listen, you moved to God's waiting room from the sophistication of California, from the sophistication of New York. People are tired of paying taxes, tired of, everything that comes with it, and they're going to Miami, and Miami very smartly, he's using the right methods to get these guys to come beyond, what Miami can offer. And he's doing an amazing job. He's stealing, Texas, other areas, but Miami is stealing great minds from California, from New York, from the most sophisticated places on the planet. So I think is amazing, that he was, adopting this technology so quickly as a mayor. You don't see much of that. So say hi when you meet him. Thank you so much. You've been lovely and amazing and smart and interesting. Thank you, Brock. I'll definitely reach out and we'll coordinate another session where people can have more questions. So people, write those questions down. We're going to ask them later on. Thank you so much.
Thank you. I appreciate this. Have a wonderful day.
Stay safe.
Hi.
So sorry for running slightly late. Now we are here with our changing the marketplace for art, music, sports, gaming, real estate, NFTs, all that world. So thank you so much. I'll let you take it from here. Where are you guys based, everybody? We have three panelists, right?
Hey, yes, I'm actually, funny you mentioned Miami. I'm in Florida, but on the Gulf Coast currently.
Nice. So I will let you take it from here and run the show. Thank you so much.
Thank you so much. And that was, great to finish on a high note there with Brock Pierce. So, hey everyone, I'm Priyanka Desai. I lead operations on a project called Open Law, which puts together various DAOs, which stands for Decentralized Autonomous Organization. The way you can kind of think about that are just decentralized kind of communities that pool together capital and then make decisions and vote on where that capital goes. We've done that in the venture capital context with a project called Allow, and now we've actually done that in the NFT context with a DAO called Flamingo. And really there, the objective is collectors, like-minded individuals pull together their capital and take different strategies in the NFT space. And so that's kind of what we're here today to discuss. For those of you who aren't familiar with that word NFT, it stands for non-fungible tokens. And really, at a very high level, and we can kind of dig in with the panelists here too, is it's a way to almost tokenize a piece of digital property, whether that be in different contexts. So before we dive in, I think maybe it'd be really helpful to get a introduction from each of the panelists today. Derek, I see you first, so if you want to maybe kick things off, and then Kate, that'd be awesome too.
Yeah, no problem. Thanks, Pri. I'm Derek Everett-Schloss. I'm an investor over at CryptoCurrencies. We're a fund that's spun out of Collaborative Fund based in San Francisco and New York. I'm currently based out on the West Coast, and me and my partner Steve, we have been investing in financial infrastructure as it relates to the blockchain space for the last few years. And for purposes of today's call, really had a strong emphasis on decentralized infrastructure related to non-fungible tokens in the NFT space. So also a member of Flamingo DAO, and love the work that the team over at OpenLaw is doing, and so excited to dig in today with the rest of the panelists.
Thanks, Derek. Kevin, would love an introduction from you as well.
I'm an artist working across photography and sculpture and film and then generative techniques from AI to blockchain. My first work in using blockchain as a method was in 2013, and I have a project involving 1,111 NFTs coming out in a couple of weeks.
Amazing, big generative art fan. And Kate.
Hello, everyone. My name is Kate. I actually run a couple of companies. First is Safari Consulting, which specializes in advisory in financial and art and real estate. And the second one is my passion as Kate Was Gallery, which is based in Zurich and is a pioneering gallery which focuses on new media art. And we were the first ones who've been kind of linking the traditional and digital art worlds and exhibiting artworks of the pioneers like Kevin Abosch, for example, back in 2018 in our blockchain show here physically in Switzerland. And I mean, I do a lot of educational sessions, work with collectors, collection management, occasionally write, and because now I guess everybody has to speak and has to write about whatever they're doing. Yeah, and I'm happy to be here. Thank you for inviting.
Awesome, thanks, Kate. And yeah, we have a really great panel. It's a mix of folks on the investor side, on the creator side, and also like on the gallery, traditional art side. So it's good to kind of get like a fulsome view on the current, I guess, space that's emerging here in the NFT ecosystem and how it applies specifically to digital art and beyond. So kind of on that note, and I think this may have been covered previously at the conference, but it's always helpful just because I know NFT is a pretty broad stroke term that gets thrown around a lot. I would love to kind of get, Kevin, your point of view on what an NFT is and how you specifically kind of see that tying into your artwork.
Sure.
That'd be great, I think.
So maybe it's best to reiterate if it's been said. An NFT, non-fungible token, it's an entry on the blockchain, the underlying technology that we've come to know from Bitcoin and other cryptocurrencies. The difference with an NFT is that the token is non-fungible, meaning that it's unique, it can't be divided into smaller pieces, and it's not interchangeable with identical tokens. It's unique, and therefore is a very interesting mechanism for authenticating scarce or rare objects, including art. My earliest NFTs were in 2018, actually. We're hearing a lot about this sort of from early 2020 up until now. And but in 2018, I did 2 works that were not connected to any media, in fact, so perhaps a little more challenging. There was no visual representation. There was literally the token but nothing to see or and then the work that I'm doing today, of course, is attached to media, and that's usually how it works. You have for an artist, it's a great way to present work that is either digitally native, or it doesn't have to be. It could have some physical, real world manifestation, and then you choose to give it a life also in the digital realm. And I'd just like to say that in 2018, all of this talk was kind of far out. People were like, wait a second, if I can't put it on my wall and I can't touch it, like how does it have value? Ironically, many of the people who were saying this were people who invested in cryptocurrency, which mechanically is this, same process. Now, forward to now, 3 years later, and I think we're dealing with a well-vetted technology, because I think that's what people are concerned about. As an artist, I don't get too caught up in the art market, but for those who care, it's a robust asset class that shows a lot of potential.
Awesome. Yeah, you kind of touched on a little bit of this, and so just to kind of level set, like digital art is a great use case for NFTs or like this kind of digital property, but it can extend beyond that to collectibles, to metaverse assets, so like gaming assets and the like, and also to real world physical assets too. So if you want to represent a house in some sort of non-fungible token, you're able to do that too. And we haven't seen the proliferation of that, but I think that eventually, of course, when you're interacting with the real world, there's obviously some points of friction there. So I'm sure eventually we'll get to that point. Kind of what you were drawing from with like the comparison to Bitcoin and other cryptocurrencies, I think it's kind of just helpful to tease that out of it. So, Kate, I know when we were chatting earlier, like it'd be kind of interesting to hear how you see NFTs as it relates to Bitcoin and other cryptocurrencies, or if there's any parallels we could draw there and what that looks like.
Yeah, I think as I've been told, that our audience is not really familiar with the term NFT, and also with the crypto space and what the hell is going on in the art market, and also in actually art and finance market. So I think the easier, but most of them probably are familiar already with the Bitcoin and cryptocurrencies, right? So I think the easier comparison, just to explain in the easy language, would be like NFT is like, as Kevin said, is an entry on the blockchain, and the same decentralized digital register technology that triggers cryptocurrencies like Bitcoin. So unlike regular cryptocurrencies, NFTs cannot be directly exchanged with one another, and this is because that no two of the NFTs are identical, where the Bitcoin, for example, is fungible and interchangeable, meaning each unit of Bitcoin is identical and with another and can be traded. Therefore, NFTs do not have the same property. Instead, they cannot be traded and because they are unique digital tokens. And majority of people, they call it like digital cards. And each card contains some sort of detailed information, including the purchaser's name, the date, information of underlying. And this data makes it impossible for this, let's say, digital cards to be traded with one another. And the most of NFT tokens, I mean, to be more technical, they have this Ethereum, they are built on Ethereum main chain, which is Ethereum, like a little brother to the Bitcoin. So probably also people are more familiar with this term. And using one of two Ethereum token standards like ERC 721 or ERC 1155, on the same chain allows this software developers who are building that to deploy these NFT contracts and guarantee that they are compatible with the larger ecosystems. And that's where you, Priyanti, kind of brings the exchanges and wallet services like MetaMask and Ethereum wallets and stuff like that. So, and in how do we apply that in the artistic, in the art market, that usually the artist uses like a platform, a blockchain platform. There are many of them nowadays, and they mint. This is also a new term, which basically means create or generate an NFT, and then newly minted NFT typically doesn't have the graphic file or other data than data that make up an artwork. And this is what Kevin also mentioned, that, you know, the works that he created back in 2018 didn't have this graphic component, which is also stored somewhere else on the centralized server like IPFS, which means Interplanetary File System. And Kevin's work back in 2018 was more conceptual work, literally. I think maybe you, Kevin, can add up a little bit on that, and didn't have this graphic component and additional data stored somewhere else. What is it I wanted to say as well? So this in art market, the reason, the opportunity that artists saw back in the days, that particularly very important for digital artists, is to apply this digital component and to be able to trade and transfer this data of media files or JPEGs through the blockchain, because this is basically peer-to-peer technology. And yeah, so the one of the first works, I mean, back in 2017 and 18, and where among those the CryptoPunks, the famous ones. And yeah, so I better stop talking, because I can talk more and more about it.
And I think, you make a good point here. Like, I mean, a lot of the digital artwork that we've, has existed since the advent of the internet. This is a great medium to both like trade this, sell this, but, because, I have friends in the traditional art world, and a lot of them like initially felt like it was sometimes difficult to sell digital artwork in the traditional world, and this is like a fantastic medium to do so. So it's very complementary to digital work in many ways. I kind of wanted to, on that note, kind of understand the NFT ecosystem and how maybe people in the audience could participate in this. So, it'd be great to get, there's two ways, like, there's the NFTs themselves or the digital artwork or whatever kind of, medium is actually getting expressed in this NFT, but also the infrastructure that supports these NFTs. So there's marketplaces where you could buy this that almost like resemble like an auction house in the traditional world. There's different pieces in the NFT ecosystem. So Derek, I kind of wanted, from an investor standpoint, like what's the best way to get involved in this? Is it to invest in the underlying infrastructure? Does the value accrete to the NFTs themselves? Like, can you kind of paint that landscape a bit?
Yeah, happy to. And maybe it's helpful to also just kind of piggyback on some of the commentary around scarcity from Kevin and Kate, just to kind of help tease out some of what's getting unlocked here and maybe where value will accrue as a result of that. So I think, the way that I tend to approach this, and kudos to Kevin and Kate for the terrific explainers, I'll take kind of a more orthogonal approach. There's just, if we think about, Web 2 and the last 20 years of the internet, there's been really no native way to create scarcity that traveled with unique digital properties. So we think about MP3s and PDFs and images, written content, video game characters, movies, music, the list goes on and on. Anything could really be copied and duplicated without referencing the original author or the original digital. So I think the primitive that gets unlocked here is that, using the same type of technology that underpins Bitcoin and allows us to trustlessly track that type of information, money, we can apply that same technology to digital media of all kind. And so we, for the first time, have like these unique digital objects that sit closer to the owner, instead of being, sitting on some centralized server or some centralized database or some centralized platform where value may start to get dispersed to, other intermediaries or rent seekers. And so, yeah, I think when I start thinking about this from first principles, I start thinking, okay, what are the cool things that get unlocked here? The first is, we have, I think, an opportunity to really bring power back to the creators themselves and allow them to dictate where their assets live and get sold and get traded and get programmed. and allows them to interact with audiences in a much better way without kind of these intermediated layers. And so from that perspective, if there is a creator of some sort of digital media that is providing value, you know, fans like yourself, Pri, or myself that are interested in collecting, you know, scarce MP3s or scarce artworks or scarce video game characters or whatever it may be, we can now engage in a trustless experience with these intermediated free assets that will maybe, you know, accrete significant value over time. And this is the thesis that Flamingo DAO has taken. We are really interested in finding these maybe these assets that could accrue value over time that may look like a video game property or a significant historical piece of artwork that's leveraging blockchain, and really believing in the story and the narrative and the context around these individual pieces. I would say more in my role from a fund and thinking about how this environment will play out. I think the things that get me really excited as an investor in the space from like an infrastructure level are things like curation or programmability or finance or how communities are will form around this stuff. So, let's start with curation. I think let's talk about like where value kind of sits with Web 2. With the internet allowed all of this information to get digitized and be used and on platforms and sent between individuals. And so you start to see, where over time that a lot of value would accrete to these aggregators of that information. You think of, Google or Expedia or Airbnb. These are essentially, landing places for peers to interact with one another. I think we're going to see that same thing happen now that we're moving from information exchange to value exchange. There's going to require some sort of curation layer that exists now that all of this value is moving to the chain. So, about a year ago, we got really excited about this idea of, okay, where will there be these touch points of curation that are required? And so we took an investment in a platform called Super Rare, which really highlights, these one-of-one pieces from curated artists around the world. Programmability is another one. So now that, these assets live in this, digital wrapper that can be programmed with all sorts of information and logic, there's something really exciting about, a value being extended over the course of an asset's life cycle that didn't exist in the traditional world. So, async is one where, they are essentially creating these programmable layers that can sit within an asset that allow multiple people to own and interact with single assets in really unique ways. That's another infrastructure project that's interesting. I think finance and decentralized finance, intersecting with these assets is fairly fascinating. We think there's going to be a lot of value there. So NFTFi is a project that we're really excited about, where owners of programmable art or programmable media can put their art or asset into a lending marketplace and allow anyone in the world to say, hey, I'll lend you X dollars, and the collateral for that loan will be this valuable NFT that you're putting up. And then the fourth one I touched on was community. So we're seeing now like this bridge get closer and closer between artist and fan. And I think communities are tailor-made for, communities will start to form around these assets in ways that we just didn't experience with Web 2. And so I think the question that I'm always thinking about is how can we use these NFTs as primitives for new types of communities to form around the artist or the album or the event or the song or the artistic works, and what kind of access and financial incentives can we build into these assets that will create this sticky long-term community that rallies around these pieces and this infrastructure in new and unique ways. So yeah, as an investor, those are kind of the ideas that are always kind of bubbling in my head.
Yeah, no, absolutely. And I think you touched on a lot, beyond just the NFT, digital art collectible side of acquiring them. There's like a lot of things like community and plugging that into like a collateralized art lending platform that's peer-to-peer, or even, fractionalizing that artwork and spreading it amongst a community. There's just a lot of potential, just given the general kind of flexibility and liquidity that you can see in this market versus maybe traditional art, which I think kind of, I'd love to talk to Kevin about, what this is like from an artist standpoint. Like how is this different than maybe engaging in the traditional art market? And like how in many ways does that like liberate you as a creator and artist? Because I'm sure it's, there's definitely some parallels, but differences as well.
Yeah, well, this what Derek was talking about with community, and you were too, that really resonates, and I'll tell you why. So before the pandemic, I had a body of work that was based around cryptographic alphanumerics that were going to be shown large scale in traditional setting. I was going to do a show in New York and maybe one in Asia. And with when the pandemic hit, that kind of scuppered all those plans. So I started looking at the work and I said, you know what? I think I'm going to expand the project a little bit from 30 works to 1,111 works. And I'm going to present them as NFTs. And I started to view the work differently. I knew that the visuals were going to be consumed, viewed on monitors. They were going to be literally electrified. And there was a quantum philosophical component within the work. Even though they appeared static, I imagined them in some superposition, and then they were very much alive. And then I thought, okay, well, I actually want them to be embedded with some intelligence. And over a period of time, that's what I did. And then so I started looking at things that could be extrinsic to the art, but part of the intrinsic value of the art. So I realize you're into DAOs, Priyanka. Well, so that's what we've done. We've essentially embedded the work with a DAO. There's also some AI components, but once the work's out of my hands, I don't have control over what happens. And it's going to be really interesting to see how communities choose to engage with this work. I have set some framework that will make it easy to explore the attention economy and the intrinsic value of attention, and I had to build this component not on the Ethereum blockchain, on another chain called Arweave, that has a rather large community ready to play with my art. But so it's not only expanding the way people engage with art, but even if you remove the art part of it, it's going to be really fascinating how the NFT itself serves as a node around which communities can gather, build, make the world a better place, etc. And that's really exciting for me to be part of that. That's happening right now. I mean, this what we're talking about, communities gathering around NFTs and hopefully amplifying value of all sorts. It's happening right now.
Yeah, and it's pretty amazing to see. It's like, not only are you buying like these works and these artists are now almost creating communities, network effects tied to them, which is kind of amazing. You're like applying this to the creator economy, which I think is pretty special. And I mean, like we've seen the proliferation of like Substack and all of these different things, but like if you add a token or an NFT to that, I think you're gonna like see a lot of interesting online mechanics and online community mechanics tied to that. I kind of, on the, I guess comparing it to the traditional art world a little bit. I mean, we're seeing the like traditional art world, at least, from my conversations with a few people there and, what's happening there. And even the price points, I think, are definitely causing the traditional art world to pay larger attention to what's happening. I mean, Kate, I'd love to kind of get a sense from you as to like what you're seeing as the traditional arts adoption of this. I'd love to, it'd be great if you could kind of touch on what's happening with, traditional auction houses diving in here as well. But I mean, would love to kind of get your thoughts on that vantage point and what we're seeing these two worlds collide a little bit.
Yeah, I think, it's better to start from the beginning, the whole idea, how it started, the main concept of this crypto art and crypto space and using blockchain and creating NFTs. Literally, it was a very interesting idea to disrupt the traditional art market, right? And with NFTs, which enable the creators, so artists, to keep the share, like, through creating their tokens, they can keep a share of the profits that they make from sales, so-called royalties, right? So the whole idea of also dealing and selling and minting the works on these blockchain spaces were to democratize the work, to democratize the art market and enable to link artists directly with the collectors, where they can meet, sell, buy, and interact without middleman, middlewoman, like galleries or auction houses. And the most revolutionary thing was that in the traditional art market, normally artists do not get any commissions, any royalties, any fees from the secondary sales. And this is the key difference, I think, from the very beginning, from the traditional model to the new model. And I think me as a gallerist, you know, I'm supposed to be probably on the traditional art market side and say, hey, you know, like, don't exclude me as a middle woman, you know, like with a gallery or with the auction house. But I think, you know, there is absolute fairness in this model, and I'm more than actively supporting this model where artists actually get the commissions and royalties from secondary sales. And I think, you know, Kevin also maybe can comment as an artist here, that it's really nice, you know, when you see your work being sold in the primary market from the gallery or from directly from the artist. And then, you know, it accelerates also with the different budgets and price on your work, and the artist is always kind of getting acknowledged with the small profit shares, you know, from the resales as well. So said that, this is the first and the key difference between traditional model with versus the new model. And then, of course, you know, there will be, like, there were more and more platforms coming in and flooding, you know, also trying to create, you know, these marketplaces like Super Rare, like OpenSea, Rarible, and there are many. But to enable more artists who also don't have any representation from the galleries or museums, you know, to unable to create and reach out to the collector. And many artists who became and now are known as a crypto artist, they never been successful in a traditional art market. I mean, they didn't have any sales before. They were not acknowledged, they were not welcomed, and nobody represented them, nobody knew about them. And this space enabled them to enter a dream, you know, it's like a dream came true. For many of them, they found their collectors, because also from our globalization through the internet, you know, you can reach out with just one JPEG image, you know, you can reach out to the rest of the world in just with a push of a button, you know. And I think this is revolutionary, and I totally get the whole model. Whether it works as it is, it's a different question. Because at the end of the day, from the very beginning, all the blockchain marketplaces, they were saying, we link one to another, and we don't do the middleman or like gallery services, you know, we don't do curation. We just kind of enable all the artists to present the work and reach out to the collectors. But at the end of the day, all of them, or majority of them, do realize that your curatorial program is also important, because as time shows, collectors who come to the space will also get a little bit confused and lost within the time and within the amount of artists and artworks which are already on these platforms. They need some navigation, and they need some curatorial work where they can also get familiar and educated. What is the difference between this work and this work? Because it might seem aesthetically similar, but the behind the scenes, you know, what is the difference between one to another, you really need to learn or to know, and someone to tell, you know. So again, we are we are now going through a stage, probably 3, you know, where we already see integration of curatorial job. We also see where the galleries and auction houses come into the space, and also become more and more active. And we probably majority of you heard about the Christie's auction sale of one of the crypto artists called Beeple. He has created this 5,000 days with this digital work, which he kind of did a collage of all the 5,000 days, and it was auctioned purely as an NFT, as a JPEG image. And I think the auction lasts for 2 weeks, and I think it will finish only by 9th of March, but I might be mistaken because I'm not following that on everyday basis. This is not my job.
Yeah,
but
I've been following it. I'm just so
yeah,
curious.
yeah.
But
I think
there's about days left in that, and it's last time I checked going, $3 million, maybe more than that.
Yeah,
so
they estimate
3.5.
3.5, yeah, 3.5. But they were estimating that it might go up to 50 million. But let's see how it goes. I mean, again, here it will be more not about the how much it goes, but also just to show that we have more people from traditional art market side coming in the space and like trying to integrate this into their businesses. I mean, it was a big question whether they were going to accept cryptocurrencies for this sale. And I think at the end of the day, they did allow that, but it's also not an easy process because you have to use an external wallet of Coinbase, or again, you maybe know better, but again, not as easy as it is if you just a collector and you wish to buy one of the NFTs by yourself, directly from the artist via one of the blockchain platforms or through the galleries.
Yeah, I think you're probably right. I mean, they're accepting crypto, but it's not as smooth as like going to one of the marketplaces today and just putting a bid in. It's not as like fluid there. There's layers of process. But I think it's pretty incredible to see an auction house actually sell an NFT and accept crypto. I think that's pretty historic for this community, and I'm sure after this sale, the likelihood is that a lot of artists like yourself, Kevin, and others will definitely kind of, be a part of this growing art community in the traditional world as well. So I think, it's only a matter of time where we're all like kind of thinking of this all in one common way as just art. This is just a new medium to kind of put that in. I kind of actually wanted, we lightly touched about this, but so there is digital art, but I'm kind of curious, like, have you guys been following what's happening with NFTs as it relates to like, other audiovisual, music, art, any specific, I know there's obviously a lot of interest, capital, celebrity that have jumped into this. I think we kind of lightly mentioned CryptoPunks, which is in what I describe as like an OG collectible in the NFT space. It's one of the first. I think the last big sale I saw, there was a CryptoPunk that went for $1.2 million. On the Flamingo side, we bought a rare alien CryptoPunk for $750,000. That there definitely seems to be like this idea that in 10 years, like CryptoPunks will be the Warhol of the NFT space. But I kind of wanted just to kind of get an idea either from you or Derek or Kevin as to like what you guys are seeing, what trends you're seeing in the NFT space, and as far as like beyond just digital art, and what are kind of the price points to get in and entry, and I know that there's something available for every price point, but I just kind of wanted to dig in a little bit deeper there because I'm sure folks here may want to start collecting too.
Evan, do you want to go first, and then I'll jump in after?
Sure. I mean, so people throw around, the term NFT very loosely these days. And, as we've discussed, there are different flavors of NFTs. There's, there are collectibles, there's native digital art, there's a little more traditional art. And obviously NFTs can be tied to real property as well. And when you talked about CryptoPunks, I think that's really interesting. And I happen to have a few from, 2018. I was able to, I actually didn't buy, I actually bought them as gifts and I never gave them away. So I found myself sitting on a few of these and had a happy surprise when I saw them trading for, at the floor of like $30,000 a piece. So it's funny because Matt and John, who created that, I remember in the beginning, it occurred to me, I said, so wait a second, you guys are app developers, they're very clever two guys. And I said, but do you identify as artists? And they're like, no. And that's what I thought was really interesting. And so it's funny that you say they're the Warhol of their time. As far as I know, Warhol always identified as an artist. But it seems like the zeitgeist of crypto and the hype around NFTs has sort of transcended this sort of identification of the author. Mark Cuban makes an NFT of whatever he did. He did something the other day, or whether it's these NBA Top Shots, and this line between collectible and art gets blurred. But just like traditional art, people buy these things for different reasons. People buy them because they want to share in the experience. They want to dwell in the same space with these things, stare at them. They buy them for the sake of social proof and validation. And of course, they buy these things as investments. And it's usually not just one of these things. It's two or three of these that they weigh before they make their decision. That's all. I think there's.
I think it's a good point. I think it's a good point because many let's say creators and the pioneers in this space, they were some of them, they were not artists by nature, right. And they became artists. I mean, we've been exhibiting CryptoPunks, the only physical CryptoPunks back in 2018 in the same show. We've been in a group show where we had Kevin's work, and they were only 24 made. And this was the turning point for Larva Labs when they started to call themselves an artists. So actually we've been going through the historical time, now we're looking back at that, and we have, of course, some press who covered the whole exhibition and stuff like that, who've been documenting, saying, oh, now that we actually produced the print and physical component to the NFT, and we've been signing it as the artist edition 1 out of 1 because this is unique and kind of signifying with signature by pencil that this is the artwork, you automatically call yourself an artist. Before it was interesting.
I don't know if you're touching on this. So interesting thing with Kate is that she gave, as far as I know, Matt and John their first show with CryptoPunks in Switzerland. I was part of that as well, and they made an edition of 24 CryptoPunks. If anything's wrong, let me know. 24 CryptoPunks with a physical print as well. And so now with all this stuff going on, and it's all about rarity, and the alien punk you referenced, Priyanka, is super rare and worth more. But Kate now has these 24 pieces, and I'm getting emails because I know Kate from these crypto whales saying, how do I get my hands on that? How do I get my hands on that? And so I think that's funny that now people actually want a physical work to accompany their NFT. At least enough of them are, because my inbox is full of requests on how do I get to Kate.
Yeah, definitely. And, because again, we talk about scarcity here. And for like all assets, supply and demand are the key market drivers, right, for the price. And due to the scarcity nature of all NFTs, of course, there is a high demand for them from gamers, collectors, investors, and people are often prepared to pay a lot of money for these NFTs. But I have a question: how long it will last? The whole scarcity thing, because the more like big fish comes, to space and just raise the floor from with millions of dollars automatically, and everybody becomes an artist, to create their own NFTs. I don't know, Lindsay Lohan sell an NFT for $60,000. I have a big question mark. I mean, why? but again, like me as a gallerist, I stay neutral and also never comment on whatever collectors or new type of collectors collect, because the tastes are different, and you cannot question the taste. And how the new generation collects, I totally respect that. And I have a great fascination towards this, because they look at things and they collect things in completely different way from the traditional collectors. And I think, you know, as a generation of how do you call them, millennials? No, not millennials, the new ones.
Gen Z. Yeah.
Gen Z, yeah, generation Z. I think they want to prove us that basically the elder generation did everything wrong, and they just, you know, do the opposite, you know. So fiat currency, no, actually there is a digital currency. So here you are, you know, like we can prove you, and everything has this kind of game component. So I think when we look at the collecting NFTs and everything, it's also some sort of, you know, this addiction of collecting. It's like of gamification in the way of how you collect. And from the trends and hype that I've seen for the last couple of months, particularly at the beginning of this year, is that before, for the last 2 years, we saw crypto collectors and traditional art collectors, right? And the crypto collector was already some type of new type of collector. Now we have also investors and flippers. So we have a different type of people coming into a space, and that's okay, and this isn't understandable, because where the money comes, you know, the more interest comes, and the different type of bad and good. And this is our question as a community, coming back to again community thing, to actually make a right decision of how we wish to this ship to sail, you know, in which way. How do we do it in a bad way or in a good way, and how we develop the whole space? Because for us, for people who have been in art and tech society for the last 3-4 years and trying to build a brighter future, you know, using this blockchain technology for the best kind of purpose, transparency, you know, like also enabling artists, you know, to get the royalties, etc., not just to monetize. This is a big question for me, how this community from the investor side, from big whales and from I don't know, flippers and all other let's say enthusiasts, you know, how they influence the whole crypto community.
And I think kind of speaks to what you touched on. It's like it's almost like the collector base and community has broadened so much that you're going to just have this weird mix of people. Like to your point, you know, avid collectors, people who want to be the first to discover an emergent artist, people who just want to flip for value. So I mean, we're going to see the whole thing, and I'm sure that will get fleshed out like as the whole ecosystem grows. But because there is more liquidity, it's easier to collect. It's more direct to collector, I guess, D2C. We're gonna see more of these different types of dynamics, I think. You know, Derek, I think I wanted you to kind of comment, and then I just wanted to turn quickly. I think there was like a question there. And if you want to comment even on some of what Flamingo has focused on too, I think that'd be good too.
Sure, I'll just super quickly address Kate and Kevin's point, which I totally agree with here at the end. You know, I acknowledge that art history is, you know, far richer and more nuanced than, you know, anything I'll be able to cover here. But I will say that like creative expression, the way we create work now is becoming more strongly influenced by technology. Our lives are becoming more digitized. The creative work we're making and sharing with the world is becoming more digitized. There is this new format that's exciting for artists, and we're going to see this expansion, I believe, of what constitutes, you know, art here in the future. And you know, understanding that it's really difficult to pin down and label art movements while they're happening. You can only kind of look back over time and see, oh yeah, that was the point at when things happened. And so a lot of the ideals around scarcity and liquidity and the financialization and the, you know, all of these concepts that were really segregated and siloed in the traditional art market over the last hundreds and hundreds of years, it being compressed together in this digital format, this internet format, this global format, I think will expand our ideas of how art gets created in the future, how communities form around art. To address the point you were making about Flamingo, you know, the interest that we have is taking those same core concepts and expanding them out to, you know, the future of gaming, the future of collecting, you know, collectibles. I think a great example that seems to be on the top of mind and is seeing somewhat of a cultural phenomenon is NBA Top Shot. They launched about 6 months ago. It's a basketball card collecting platform that's purely a digital experience. They're using licensed moments from the NBA games themselves, and they've packaged them into this trading environment that compresses the primary sale of these packs with the secondary trading of these packs. And so what you're seeing is this, this mix of collecting and finance and financialization and real world performance of these players, informing the pricing of these collectibles in real time. And you're starting to see some crazy market dynamics. I know they've done already $300 million in GMV just in the last 6 months. And so I do think that this idea of, I like to think of what's happening here, whether we're talking about collectibles or gaming or art, it's expansionary, right? It's expanding our ideas and the borders of what we constituted these things in the past to be much bigger, much more global, much more financial in nature. And so, yeah, I think the approach that we're taking right now is just trying to parse through all of the noise and figure out where there's opportunities, both from an asset side and infrastructure side. And I think those that are able to successfully do that will enjoy the ride. And I think that's what it comes down to.
Yeah, and that's a great kind of note to end on. But before we get into the question, so I think there's one question here that I can float to whoever wants to answer it. But I think, Donna, you also kind of took a stab at it. But the question was from Garth. Could a digital film be distributed as an NFT, bypassing intermediaries and existing platforms like Netflix? And at the time, have a viable marketing and financial model to allow significant monies to be earned by the film producer to cover costs and earn a profit. So basically, can you put like a digital visual work on an NFT, and then when someone purchases, have like the funds of that stream to all the parties who created it, basically?
I would just answer that. I would just say that you could, but you still have the issue around securing the media itself, which is difficult, right?
Yeah, I agree with Kevin. I'll say, just conceptually speaking, we talk about NFTs as this digital wrapper. It proves ownership over a piece of work, but it doesn't prevent others from watching or viewing that work unless there's some sort of tie between a gated process connected to that NFT. Those are challenges that are being worked on. I'll also say it introduces some of the concepts that we talked about on this panel, which are the short answer is yes. You can now have a creative work be packaged by an author of that work, and it flow very quickly to someone who wants to purchase that work anywhere in the world and 24/7. I think and you can program that work with interesting features and logic, like downstream royalties and all sorts of cool stuff from that perspective. It brings up this point that Kate was touching on earlier, which is, in order for people to appreciate that work, you're still going to have this curatorial layer that needs to exist that explains why that work is important, much like the distribution pipes that exist today are so important. And so I would say, yeah, you're compressing you're tightening the bridge between author of work and buyer of work. But at the end of the day, you're going to need some sort of curatorial layer on top of that to really help explain why the context of this work is so important. I think we're going to see some interesting dynamics here over the next couple of years of us rebuilding what we've seen work over the last 100 years in art or in collectibles or in any information exchange of any kind, applied to blockchain technology in new and innovative ways. But there will always be a need for explanation and context.
Absolutely, I agree with you, because what I realized. I'm now finishing the article. I call it like how to collect crypto art, like a beginner's guide, how to start and where to start. Because if you really want, back into 2 years ago, it was much easier for the collectors who wanted to kind of get introduced to the space. There were only a few platforms and not so many artists, and you could have kind of extract the stars of a crypto space automatically, and it was kind of easier, a little bit easier to navigate yourself. And then you kind of just have to educate yourself on the technical side of it, and that's it. Now with more people coming to the space, also with more artists coming to the blockchain, and more blockchain platforms growing and introducing different conceptual business models, you know, to challenge the collectors more and more. You know, if you are not sitting in front of a computer 24/7, if you don't have any clue and your business is not related to crypto or to art or to any sort of IT or software development, then you have probably no clue, you know, where to start, how to go, where to look, what to collect, and what is good to collect, what is safe to collect, how you store these NFTs, you know, how you preserve them, how you look at them, how you exhibit them, how do you tax them, you know, which is also a very interesting question, which you didn't touch here. I wonder when the regulation comes to force and also say, hey guys, you know, like this is crypto assets, and also like, you know, you collect and you trade, you also make all this high margins on the income. I don't know if there are any income tax, you know, depending on the location where you sit as a collector and where you have your wallet IP address, right? I mean, there will be more challenges, I think, you know, and now we're just enjoying this chaos, you know, and which is beautiful, but also like it attracts a lot of attention for the regulators to come and probably regulate us more in terms of for the traditional art market first, and then for the crypto space as a cryptocurrencies and tradables, and then also for their collectibles like NFTs. So yeah, I'm going to finish up the article, how to collect and where to start and where to look. I think it will be widely used, because then you will save yourself a lot of time to navigate through the space and all the blockchain platforms. And if you really need some questions, to be honest with you, no one really provides you the answers. And that's where I think their galleries work is still important, because it's more kind of a family office support, you know, like you have a retail banking and you have a family office, like, you know, for the private clients, where you have so many questions and you come and somebody sits with you for 2-3 hours and explain you the whole process individually, not for the mass market.
It's pretty open seas right now, so I think that sounds great. Awesome. So, I mean, I think that we're about time. I don't know if there are any other questions or if there are any parting words from either Kate, Kevin, or Derek, but, you know, if not, thank you so much for having all of us. And
thank you.
Yeah.
Thanks.
Thank you, everybody. Thank you much for leading the discussion. I think it's an exciting topic and we should definitely talk about it again. Those of you who are in the New York area, let us know, because we'll be doing an event on April 22nd at the World Trade Center. So COVID kind of get us, only those in the tri-state area are brave enough or stupid enough to fly can join our event. No, I'm kidding, of course. So thank you so much for being with us. It's been really exciting. And I'm looking forward to being with you guys again. Thank you. And thank you, Donna, for making this happen. I think we had a great time today. And I guess the only thing I regret is that everybody were on time, which means I don't have those breaks where I suddenly need to do something and then I impose my musical taste on everybody and I put my videos. So I'll do it now. I will leave you with some art here. So our next session, our third part of the blockchain and DeFi conference is April 27th. And the fourth part is May 25th.